And we live, finally. Y'all, thank y'all so much for waiting on me. Thank you so much for bearing with me. I was supposed to do this live on Thursday. It is now Sunday. I figured today might be a little bit of a better day. I tend to go live on Tuesdays for my Mortgage Boss Talk Tuesday, but things kind of got shuffled around, and I did want to make sure that I got this information out. So thank y'all so much for joining me. If you are new here, hey y'all, hey, I am Joy Bailey. I am the Mortgage Boss. Joy, I'm a licensed loan officer in multiple states. I have been a mortgage loan officer for almost a decade. So that means I have seen the housing cycle one full time. And one full time for me means we had interest rates going down, 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 and they plummeted and then they skyrocketed. And y'all, we're going to talk a little bit during this mid-year check-in, mid-year housing update to see, are y'all okay? Are we okay? Life after this pandemic, honey, it has been a time, I will say that. And to be totally honest with y'all, I feel a little bit lied to. I don't know about y'all, but I do. I feel a little bit lied to. As a loan officer, I spend a good amount of time listening to different presentations and things on CNBC. I spend a good amount of time perusing through publications and articles that I see on websites that I have to pay to access that you all may not be able to access, like Housing Wire. I keep up with a lot of what's being talked about on social media, on Instagram. I follow all of these different Instagram sites that show all these different charts and graphs and listen to everybody pontificate about what they think the rates are going to do. And then they don't do it. And then I look crazy. So at this point, y'all, I just be lying. I'm just telling y'all the lies that's told to me. I don't know. I don't know what's happening. I don't know what is going to go on. But like I said, I did want to do a check-in with you all because I will be honest with you. And I got a page full of notes. So I'm a little rusty because I hadn't been live in almost 2 months. I was struggling to put my equipment together. That's why I had to delay Thursday. Stuff wasn't working right. I had to get batteries, but whatever. But I will say, one of the things that we were very, very optimistic about at the beginning of this year, I don't know if y'all remember, but back in November, December, rates started going down. And so we were hyped. We was like, oh, shoot, the good times about to come back. Oh, they didn't. They didn't. The Fed had announced, I think in the November meeting, that they would be cutting rates 3 times. Well, I don't even think they described how many times. It might have been a range. I can't quite remember, but nonetheless, we definitely expected some rate cuts. And especially with this being an election year, we were like, yeah, it's about to be on and popping. And again, everybody, Fannie Mae, Freddie Mac, the NBA, different news publications like national news publications, they all wanted to weigh in and say that they thought that the interest rates by December would be 6%, 5%, 4%. Oh, y'all, we still in the 7s and some people in the 8s, depending on what type of transaction you have. So like I said, I'm feeling a little bit lied to, but I do want to take us on a journey of how we got here because I spent a lot of time on TikTok. So if you hear from TikTok, hey y'all, hey, you might have heard me talking about this. I did a live on, I don't know, Friday night, something like that. And I realized that a lot of people really aren't able to connect events of the past to what is happening right now. And I think different things are coming into play and time periods are getting a little shuffled around for people. And I get it. I understand. But I want to recap how we got here, what the landscape is like, and what we going to do to move forward. Because like I said, life after the pandemic, at least for me, because I can't tell y'all how y'all life is going. But for me, it has certainly been different. And as someone that talks to people every single day, specifically about their finances, and I get to know the most intimate parts of people, every financial mistake they have made, I get to know every financial success they have had, all the ups and downs, specifically over the last 2 years or so. But I can see the credit report from the beginning of time. And we talk about, oh, you want to buy a house? Yeah, I want to buy a house. I want to buy a $200,000 house. Do you know how much a $200,000 house payment is? Oh, like $1,000. Oh, try again. And then they walk away brokenhearted. That's not fun to me. So a lot has changed for me, because as much as I love, like when I say I love being a loan officer, can't nobody tell me nothing about having a better job than being a loan officer. Nobody on this earth had a better job than Joy, than the mortgage boss. Okay. Nobody. I was eat, sleeping, and breathing this job. I was volunteering people Saturday. Can I take your Saturday? I come to work. I was taking my son to work with me. Loved it. And for it to have changed so much, and me have to tell people no more than yes, that's not fun for me. And a lot of people think that I get on these apps and I present information, and they think I'm doing so in a gleeful way to be like, hey, you broke bitch. Like, no, I don't. That's not. I mean, if you are, sorry. But I mean, we all have ebbs and flows in life, but it's not gleeful at all. It's a harsh reality that I just have to share in my day-to-day life. And I see some of y'all coming on in. So hey, y'all, hey, thank y'all so much for joining me. I really do appreciate you spending some of your Sunday with me. Can y'all do me a favor? If you can hear me, like, I want to make sure y'all can hear me good, because I've been kind of going. I didn't realize it was 12 people in. Can y'all like put a 1 in the chat if you can hear me well, or if I need to like adjust my volumes or anything like that? Because I couldn't get my microphone to work the other day. So please, if you could put a 1 in the chat. Y'all doing okay? Everybody good? Y'all feeling all right? Because we got some data to go through. It's going to be a little bit dense, but it's going to be okay. My mic is booming. Is it too loud? I ain't talked to you in a little while. And I know y'all ain't seen me in a little while, but it's okay. It's all good. We gonna make it. All right, I appreciate it. Thank you so much. Thank y'all. Y'all. Oh, thank you. Okay. So Real Bravado Network. Thank you for joining me. I appreciate you, y'all. He's a content creator. We talk offline. I ain't talked to you in a couple of months, but we talk offline, and he always seems to know when I'm going live, and he pops his head in. So I do appreciate that. I appreciate that support. He's getting ready to have I saw you advertise you doing something tomorrow. You're doing a live, you're doing a rebranding. So y'all, he talks a lot about relationship dynamics and the role of the Black man in the household and in the community, and really tries to uplift the community. So y'all make sure y'all check him out for sure. Good content creator. And I think he got about 7,000-8,000 subscribers over there doing what he does best. I appreciate that. All right. Okay. Thanks, Go Mike. All right. Thank you, Star. Oh, that's so sweet. Thank you so much for the super sticker. Y'all give me that love. Thank you. Okay. Yeah, I appreciate it. I appreciate that a lot. I appreciate the love. Thank you for popping in. Y'all, let's make this a conversation. I don't want to just like be dragging it out by myself, because y'all know I be talking, honey. But please, y'all, I got some wine. So I don't know if y'all eating Sunday dinner or what y'all got going on, but drink some wine with me, and let's talk about how we're gonna get life back on track, because life after the pandemic it's weird. I don't know. I always thought that it was going to be, I don't know. I thought we were going to revert. I don't know what I thought. I'll tell you what I thought. I thought that a lot of people that have been in real estate a lot longer than me, they kept saying, oh, the market will come back. The market will come back. It'll come back around. It'll come back around. Okay. But in my head, my comeback around, I don't know why I thought this, because I had no type of evidence of this. But when I thought come back around, I thought it meant people would be able to afford houses again. That's what I thought. You know what I'm saying? I thought that meant people would be able to afford houses again. And I wouldn't have to say no so much. And so somewhere around October of last year, I realized this is it. Like, we're here. This is the future. This is the thing. Right. And so on my TikTok, I don't know if I shared it on here or not, but I kind of laughed a little bit because it occurred to me that back when I was a kid, I would hear all the politicians talk about, hey, you guys are going to mortgage our kids' future. Ah. And then I realized, oh, God, I'm the kid. And it's the future. And I don't like it at all. But like I said, a lot of people don't realize exactly how we got here. So, okay, hold on. What you say? Wait. Hold on. What's going on in the chat? Rebranding tomorrow. Now you got two live DJs. What you doing? Wait, is your content changing? Oh, okay, good for you. Thank you so much for the compliment. I appreciate that. Thank you. You say you saw my last video and you can't believe that there are people who still haven't made payments on their mortgages. The pandemic. Yes. There's some off and ons, things are okay. And then they like, oh, it's not okay. And that's something that I wish people understood. When other content creators that are significantly larger than me kind of rubbing their hands together and it's doomsday, and they have been branded as crash bros. Oh, it's going to be these foreclosures, a wave of foreclosures is coming. Baby, even if you get into pre-foreclosure status, pick up the phone and call them people. And people don't realize the bank does not want their house. I don't know what is going on. I know why it isn't widely publicized, because if you think about what happened during the pandemic, I vividly remember actually sitting in this chair, being on my headset, talking to people about refinancing. They would refinance, pull equity out of their home on Friday, and then turn around on Tuesday or Wednesday and call and be like, oh, hey, I need to pause my payments for a year because the news broke that they didn't have to make payments. Hey, did you lose your job? Did something change? No. Oh, okay. So now we're starting to see people will take advantage. But if you're somebody that really now be mindful, you just can't do that just because you're going to have to demonstrate that you have a need. But yes, the bank does not want your house. I'm not in the servicing sector, so I can't provide all the details of everything, but just understand that there are options that are out there. And a lot of people are very hesitant to purchase homes because they're like, I'm gonna just pay my rent because if you buy a house, somebody can take your house. Well, baby girl, they can kick you out your apartment significantly faster. But that's another story for another day. I don't want to go down that tangent. You feel me? All right. Oh, look at this. Hey, trucking. Oh, yeah. We're having a reunion. Hey, everybody. Thank you so much for joining me. I do appreciate that a lot. So, y'all, let's do a quick rewind and a quick recap of how we got here, because I guess here can look different for different people, but to let the Instagram people tell it, they rich. Okay, they fine. So if you an Instagram person, I'm not talking to you because you got it. You're not suffering. Okay, you're not in debt up to your eyeballs. You keep going over to Dubai and to Africa and to Do people still go to Cancun or whatever? Wherever y'all at, the new cool country, you keep doing it. I'm not talking to you. So I don't need you in the comments talking about, well, that isn't everybody. I budget my money. I budget my $32,000 for my 5 kids, and we can afford to do anything and go anywhere that we want, including paying the $6,000 a month mortgage. You have to live below your means to afford things. I'm not talking to you, okay? None of y'all people. All right. So who I am talking to is everybody else that is looking at their life after the pandemic and they like, how did I get here? So let's unpack some things. Back during 2019, we had some whispers around November, December, that there was this thing that was out there in Wuhan. Wuhan this, they did. So I'm like, oh, it's over there. They ain't talk. Why they talk? They ain't talking to me. I don't live over there. I live in America. I'm in Charlotte, right? So it seemed like every day they were still talking about it, whatever. Okay, this is nothing new to me. We've heard of diseases before. I don't know if you recall, we had an Ebola outbreak once upon a time, and that just went away. No big deal. Okay, fine. We roll December, January. They keep talking about COVID-19. All right, whatever. And, Kobe Bryant died, and I'm still hearing about it. Okay. So February comes and things start to get interesting. They start saying, oh, we've had our first case. Then I think they had their first death. And we were continuing to come and go to work. Nothing was different. I remember actually in December, did I go to Miami? I went to Miami for a wedding in December of 2019. And I remember me, my best friend, and her sister, we were on an Allegiant flight. Now, if you don't know Allegiant, it is almost like a sister to Spirit, right? It's a regional airline. It's one of those go to church before you board type situations. Okay. And we on the plane and a couple people had on masks and we laughing at them. Like, you look stupid. Why you got a mask on? Right. Okay. So that's December. So January, February, things started getting interesting. I started seeing more and more people with masks. They started having gloves on. The people had on the mask and the gloves as the combo in the car by themselves with the windows rolled. Y'all remember. And somewhere around the beginning of March, during March Madness, one day, I can't remember what day, it just started to go downhill very quickly in about 48 hours. Because everybody was downplaying it. It's no big deal. It's no big deal. Y'all, people catch colds. It's okay. It's no big deal. Don't worry about it. And there was calls. Hey, what's going on? Y'all should do something. We should do something. Should we be quarantining? What's happening? The NCAA, during the not the Final Four, but during the March Madness, they announced, and I remember being at work in the middle of the day. I went to lunch. I came back and we were literally almost in an entirely different world because they said, oh my gosh, we're not going to allow fans in the stands for March Madness. What? This is outrageous. I can't believe this. They're overblowing it. Okay. Few days later, Rudy Gobert, bless his heart, he got the party started. Rudy Gobert is a player in the NBA, in case y'all don't know who he is. And he had done an interview, I think, where maybe someone had asked him about, catching it or whatever. And he was like joking with everybody, like, ha, ha, ha. And he started rubbing on and touching everybody. Y'all remember that? And this dude tested positive for COVID. And the commissioner of the NBA was like, stop, drop, shut them down. We ain't open up shop. Thanks for coming out. God bless. Good night. Go home. Be with your loved ones. It ain't nothing to see here. And that is when everybody sat up very straight and was like, oh my God. The NBA is a $1 billion business, billions on billions. If they're saying that everybody need to go home, then we should probably go home too. And employers started saying, hey, everybody go home, pack up, don't worry about it. We'll probably be back in a couple of weeks. No big deal. We just gonna quarantine. It's all good. And then at that point, the president of the United States of America at that time, which I want to be very intentional with you all while I'm telling this story, because people are getting their timelines a little bit mixed up. The president of the United States of America during 2019 in December, January of 2020, February of 2020, March of 2020 was not Joe Biden. The president of the United States of America at that time was Donald Trump. He said, oh, dang, well, maybe let me get too. Let me talk about this. So he holds his little conference or whatever. And I remember, I think it was like in one night, it was like a rapid succession of people that were important people. And I think he did like a 9 o'clock briefing or something. And that's when everything was turned on its head. He was like, oh man, guess this is a little more serious than I thought. Let me jump on board because I definitely can't have an NBA commissioner outdoing me. I definitely can't have an NBA commissioner making executive decisions that the entire nation is listening to and leaning on. Hold up. Okay. Then we went through all of that. During that time, again, from this very seat, I remember thinking, oh my God, my life is going to be over. I remember thinking that because all of a sudden there was so much uncertainty in the market. Stocks was going down. And in my line of business, we rely on investors to buy loans from us. And when they don't want to, and when they get scared, they take things off of the market. I remember being so scared. I said, I thought I was going to lose my job. I thought, okay, this is before they said you don't have to pay your mortgage. This is the very beginning when I sat here and the same company I work for now, I was working for then. And they said, hey, we just going to pause everything for a couple of days. Let's see what's going on. They took a good bit of products away from us. They changed a lot of the criteria for people to be able to get loans because people were now becoming unemployed. They were now no longer working. Not only were they sent home, there was no PPP yet. Okay. Remember, during this time of uncertainty, I don't know. I can't remember if it was probably a couple of weeks. It might have been a month. I don't remember. But during that time, remember, it was that whole back and forth about they increased the unemployment insurance to like $4,000 or $5,000 a month. They had the PPP loans for people to make payroll while people were at home because they didn't expect us to stay home that long. It was a whole thing. Y'all remember that? And during that time, they held up the checks because the president was like, hey, hold on. Make sure y'all put my name on them checks because that's what's important. Okay. Remember? So things started going again and they said, okay, people are going to be fine. During this time, there was a man. The man's name is Jerome Powell. Now, y'all probably don't remember Jerome Powell, but I'm going to give you a picture because, again, we need to be on the same page. I believe that we need to operate from the same set of facts. And a lot of times we don't. This man right here, his name is Jerome Powell. Jerome Powell is the chair of the Federal Reserve Board of Governors. Okay. In order to try to save the economy, he did some very unprecedented things. Lowered the interest rates down to zero, which, so you understand, the rates that they have are the rates that people use to borrow money. So as those rates go higher or go lower, it determines how free flowing money is through the marketplace. They didn't want it to be another scenario of 2008. They wanted people to stay in their homes. They wanted people to have money. They didn't want businesses to go under. So they pumped a lot of money, printed a lot of money, decreased interest rates to unprecedented numbers just to make sure that everybody was going to be good. That is his job. He controls interest rates. Him and his buddies that sit on the board of governors with him, comprised by 9 people that are appointed by various presidents, and they serve tiered terms. So there's always somebody rolling off, somebody's always coming on. This is important. So again, during that time, we had money everywhere. Everybody had all kind of money, and people were able to refinance their homes, buy houses that was never supposed to be able to buy houses. And I think that's an important thing, because we'd already started seeing we were having some issues with the supply and demand. But in this situation, we ended up dousing gasoline on a smolder. It wasn't a fire. Okay. It wasn't a fire yet, but now we had a 5-alarm fire because everybody got money. Everybody making money, more money than they had before. People are like running out to buy houses. They're offering money in cash. People are working remotely. So the people in New York coming to Charlotte, y'all can stop now. You've proven your point. They're going to Atlanta. They're going to Houston. They're going to Dallas. They're coming to the South, where things had been pretty even, like we lazy, pretty flowing, pretty go along to get along, no high pressure, high hustle and bustle. It's all good down here. Well, all good things must come to an end. And now we sit in a place where the pendulum swung so far to the left or to the right or whatever you want to call it. We got to figure out how we're going to get it back to the middle. But in order to do that, we got to swing it all the way back over here, because that is the job of Jerome Powell. Jerome Powell's job, along with the other people on the Federal Reserve Board of Governors, their job is to make sure that the market is not too hot and to make sure that the market is not too cold. Well, he figured, okay, housing prices are freaking out of control. This is bananas. Like, we got to slow this party down. Way too many people have way too much money. We need to do something. And what is the one thing that he and they control that controls how much money is being spent or saved? It's the interest rates. So interest rates started going up. Now, I want y'all to understand, most people that are aware of what happens during the markets, they know that interest rates have been too low for too long. The interest rates average between today, 2024, and 40 years ago. The average means you add them all up and you divide by the number of whatever it is. The average interest rate, 7%. We're in normal interest rates right now. 7% is the average. In the 80s, when Ronald Reagan was president, interest rates was 18%. In 2020, when Donald Trump was president, interest rates were 2%. What does that mean? That means, in case y'all don't know, when interest rates are stupid low, there's a problem. We are in a catastrophe. We are in catastrophic circumstances that somebody needs to say, oh, whoa, hang on before this thing gets worse. We got to do something. We got to save the people from themselves to pump money into the economy so it doesn't fail. Why did interest rates come down from 2008 to 2020, or to like 2018? I'll say that. Rates kept coming down because they was trying to make sure that the housing market was shored up. We had an imbalance. We had way too many houses and not enough people to buy those houses. People had foreclosures. People had bankruptcies. All in 2020 and all in 2010, 11, 12, 13, 14, 15. Things started heating up. 16, 17, 18, COVID-19, 2020. Woo, this is way too much activity. So that is why we are here today. And people feel or may feel like things have become unaffordable. They are seemingly unaffordable because the interest rates had to be jacked up to slow people down from continually spending money. That's his job and nobody else. His job and not Joe Biden. Okay. When all that was going on, because I want y'all to, the president is not supposed to influence that. The president don't have nothing to do with it. They're separate. So Trump, when the interest rates were really low in like 2019, 2020, especially in 2020, it started, whatever, 21, he was like, whoa, we got to do something about this. Kind of threatened him and was like, I will fire you if you raise these rates. So the good times kept rolling. So welcome to life after the pandemic. Every time I turn on the news, everybody's like, oh, the economy is so good. It's so good. And I just be repeating what the people tell me. I'll say it because they're smarter than I am. So I'm like, yo, the economy's strong. The economy's good. That's what I be saying. I be saying that to y'all because, I ain't lying. I ain't lying about it. The economy is strong. How do I know that the economy is strong? Well, because according to this graph right here, the Dow, y'all know the Dow measuring stick of the economy, how the stocks and everything is doing. Are people making money? Are they getting returns on their investments? The highest it's ever been. The Dow is the highest it's ever been. We are historic highs, and it keeps going up and up and up and up. Y'all see that little down right here? Things wasn't going good, but then they lowered the interest rates. Remember that day I told y'all I was sitting here and I was like, I was scared. I was like, oh my God, I'm going to lose everything that one day. And yeah, this right here, that was that day. Y'all see that one day of my life. And ever since then, things have been going. A little dip. No big deal, but ooh, it's up. So what they say, people with money, they gonna keep making money. The rich get richer, poor get poorer, or something like that. That's this. The economy is strong. I heard President Biden say something along the lines of, I don't understand what everybody's complaining about. Like the economy is strong. Like people are buying houses. What's going on? I don't know what they talking about. He don't know because he don't know. He out of touch. He has no idea. A lot of those people in DC have absolutely no idea what's going on. But the Dow is up. And it's stuck. So I know why. It's because people keep spending money. Y'all keep spending money. Why y'all keep spending money? Why y'all? be spending money? I mean, I guess it's just the Instagram people that be spending all of the money. But I don't know. We're gonna talk about it. But now that we all caught up on how we got here, and we did a recap, because like I said, it's important to know how we got here. We here. All right. So let's see what y'all talking about in this chat over here. You say it's crazy folks wasn't paying bills during the COVID era, but as an essential worker, I had to work every day. Yes, you did. And we thank you for that. Because those essential workers, they had to physically go to work. Yeah, they kept everything going. And I don't know if they got bonuses. I don't know what they got, but they kept everything going. They risked their lives. And a lot of people did pass away. I had a colleague that he got it. And he was on my team. And when he was gonna make it, it was bad. They had to put a stent in his brain, because I don't know if y'all remember, like it was impacted like your whole body. He had a heart attack. I mean, it was a mess. And he's a young guy. He's younger than me. But yeah, we appreciate that. Thank you. But remember, they was out here not paying bills, but they was spending the money that they had. Now, that's not the case for everybody, because I don't need nobody in my comments talking about, well, that wasn't my situation. We know, girl. We know. We know the restaurant was closed and you couldn't get your tips. We know that all service workers, we know that the hotels had to shut down. Because I remember I was trying to do a loan for a guy, and he started the process, and he was like, hey, we got closed because nobody's here. We know, we understand. I'm not talking to y'all. Okay. Thank you, Real Bravado Network, for the $10. I appreciate it. He says, wait, slow down. People out here pausing their mortgage payments and they had the money. Who do that? A lot of people did that. Yeah, absolutely. That's what they were doing. It was a whole thing. It was a whole situation that was happening. So yeah, that happened for sure. All right. You said YouTube wiped my check. What? Oh, hold on. We'll talk about that. Oh, wait. Hold on. Wait. Okay. We're gonna circle back to this. Jess. Okay. I had to I should have stopped paying during the pandemic. I cleaned out my savings trying to keep my good credit while everyone else was stacking their money. Yes. Now because I know you live in California and I know you have a mortgage. So here's the thing. When people pause their mortgage payments, at first, the way back in the day, I guess post crash, so 2008, something like that, 9, 10, 11, there were modifications that were out there, but the modification, it was like it had to be paid back. Like if you like put some months on the back of the loan, like you would have to pay it back within like 12 months. So that was gonna like significantly increase your payment. They don't do that no more. Not now. They tried it a different way. They made it more attainable for people. They made it more friendly, more consumer friendly. And they just like, I ain't gonna hold you. I saw a lady, I pulled her credit report last week. I promise I'm not lying to you. A mortgage in America, a standard mortgage, FHA, is 360 months. I looked at her credit report. Hers was 528 months. And so that signals to me that there was one or two modifications that have happened over the course of time. And if you're unfamiliar with modifications, forbearance means you don't make payments, or you have missed some payments, and they'll put those payments on the back of the loan. Now, again, y'all, I can't go into great detail because I don't work in servicing. So I can't go down that rabbit hole because I don't want to give anybody bad information. So I'm saying it's on a high level. So those payments can go on the back of your loan. And 30 years is a long time from now. If you and it doesn't harm you. So if you want to refinance or move or whatever, like you could get another mortgage. It doesn't hurt the way that it hurt before. So that's a forbearance. You don't make payments for 3 months, 6 months, a year, whatever it is that you and your servicer come to an agreement about. That is perfect for someone that has a job loss, that is temporary. It's not a permanent solution. So be mindful of that. And y'all talk through all of your different options when you call the people on the phone and you say, I'm on Struggle Street. I ain't moved in on Struggle Street. I'm just visiting for a little bit. Can you help me? What can we do? So the other thing is like a modification. If your payment proves to be too high, if you've had some sort of reduction in your income and you have an income, excuse me, a modification could look like they maybe take your loan from a 30-year loan to a 40-year loan and reduce your interest rate to help maybe bring the payment down by $100, $200 a month. Again, I don't know. I'm using this as an example. Take this with a grain of salt. Call them people if this is what you need. Talk to them. I cannot advise you about that. That is outside of the scope of my expertise. And if you follow me, you know I'm real quick to tell you I don't know something, because I ain't gonna lie. So talk to the people. So yes, there are some options that are there, and people did take advantage of those for sure. And that's also when they ran up a whole lot of credit card debt as well. Well, we'll talk about that in a minute. You came back from lunch and the office was closed. Yeah, me too. I was like, what? Go home? Hook these monitors up? I don't know what to do. How am I supposed to do? What do I do? And I've been sitting in this blue chair ever since. To God be the glory. Because it was, I bought my house in 2017. I bought my house with an office. I was like, I'm gonna be working from home. I don't know how, I don't know when, I don't know what. I'm working from home. And that was another reason why a lot of people moved, because one, y'all remember how mad people were that they sent the kids home and they had to raise their own kids? People was pissed because they had to raise their own children. They were like, why are they here? Ma'am, they belong to you. Y'all share blood. What's wrong with you? You remember, like, the little one that you loved so much? Yeah, it's your problem now. Get to know him. He's a real pleasure. So yeah, that's exactly what happened. It was they flipped the switch and they emptied those buildings real quick. You say you know Jerome? Yeah, Jerome Powell. That's who it is for sure. Oh my gosh, I'm gonna mess up your name, and I don't want to. But I appreciate. I'm not gonna even. I apologize. I don't want to be disrespectful. But I appreciate you so much. Thank you very, very, very much, y'all. I really appreciate. I think I have 38 people in my chat. This is the most people I have ever had in a chat in my lives ever by myself. Oh my gosh, this is like such a milestone for me. Thank you so very much. I appreciate the support. I appreciate the super chat. Y'all spoiling me today. It ain't even my birthday. I appreciate it though. Thank you so much. She says, I'm claiming it now. I'm hiring you soon, ma'am. Thank you so much. Yes, you are going to hire me very soon. I can see it in your future. Interest rates will come down. Things will, I don't know. The rates will come down. That's the only thing I can guarantee you. I can't guarantee you about these home prices because they might still go up, but I do appreciate it. Thank you so much. And I certainly do look forward to working with you and anybody else that's interested in purchasing a home. I think I'm finally licensed in Maryland. I had a phone call from somebody from Maryland the other day. So I think I'm licensed in Maryland. I have to double check where I'm licensed at. You said we need competent leaders and accountants in Congress. Yeah, right. It's a mess in Congress for real. Yeah, it is. And I ain't trying to like make it about politics because I know it can be very, very polarizing. I'm stating facts. And one of the things that I think that we have gotten away from is just functional facts. Feelings are not facts. Feelings are not facts. And I don't think people can separate those two things enough. And I got a whole nother theory about that and about why. I think it's linked to literacy, but that's a whole nother story. I don't know if y'all know, I used to be a teacher. I got a Master of Arts in teaching English language arts for grade 6 through 9. I'm telling you all, a lot of the comments that show up on social media and a lot of the stances that people take that are related to things that are blatantly written down in the English language are unfortunately showing up the way that I saw them in my below grade level readers when I taught 7th and 8th grade. But again, that's another story for another day. But yeah, and we are electing some of those people. Y'all gotta be mindful. We got 40 years worth of people that's been below grade level, at least. Y'all seen Lean on Me, wasn't that in the 80s? So I'm just saying. All right. Yes, it was the interest rates. The interest rates, that's the only thing that you control to make the market hot or cold. What'd you say, Jess? The houses back then were 4 times the median income. Now they're 7 times the median income. Yes. And it's all because those interest rates plummeted. And I said this publicly before, and I don't mean this in a disparaging way or in a derogatory way. Y'all, there is a system, there is a balance, there is a structure, there's a formula to the way that the economy works and the way that the American economy works. Somebody got to work at McDonald's and not for $15 an hour. No shade, but everybody is not supposed to be able to buy houses. And what happened was, an extraordinary number of people that were never supposed to be able to buy houses were able to buy houses. And that's just economics. That has nothing to do with anyone's race, their job, their gender, their any other protected class that you want to talk about. That's a hard fact. There are some neighborhoods I will highly unlikely be able to live in because I don't make that type of money. They understand that middle America can afford whatever number house is, like whatever the purchase price of that is, and they build for that. The same way they say that they build jails based on 3rd and 4th grade reading levels, right? We can look back to see how many people were born in a particular year to project how many first-time homebuyers are coming in the market. They build for that. They ain't build for people that they didn't factor in to ever be able to buy a house. We ran out. And so then it really became I got to one-up you. You ain't even supposed to be here. So now I got to shut you out with your down payment assistance. I know your debt ratio can withstand the payment. I'm sorry. I'm going to put down 20%. Not only am I going to put down 20%, I'm going to offer $30,000 more than you. Beat that. Okay. That's what happened. And the gap got wider. And to your point, yeah, those home prices went up and up and up. And now, yeah, it's like 7 times the amount of the median income. To me, Jerome Powell is more important than the president. He literally controls the money supply. Come on, somebody. Talk about it. Talk about it. Talk about it. Tell the people. Tell the people. Tell all of the people that you know, because people don't know that. People don't know. People don't realize. People have no clue. No clue whatsoever that that's exactly what it is. Yes. And those people are appointed by the president. I'm not sure. I think, no, I do know. Barack Obama appointed Jerome Powell. Trump threatened to fire him before COVID. Then wanted to fire him again after COVID. Trump did not like high interest rates. Do you not understand? Can y'all not see the correlation? In my one little world, me and my house, I would love low interest rates. For the masses, it's a terrible idea. But again, I'm not an economist. I didn't major in economics. I'm just saying from a loan officer perspective, what I see and what my interactions are with people. That's why the interest rates are lower than the 80s, but people can, yes, the interest rates are lower than the 80s, but when you look at, and we're going to talk about it, income, when you look at the purchase price, literally home prices doubled in 4 years. And when you look at the interest rates on the highest purchase prices we've ever had in life, yeah, that slowed things down. But what he thought was if the interest rates came up, the home prices would come down. But they did not factor in, or maybe they did. I don't know. I'm not behind closed doors. I want to assume that they did because they're supposed to be a lot smarter than me. The people that thought that may not have realized that there's not enough supply to go around. And when you have a supply and demand issue, the price is going to be up and stuck no matter what. So even though the pool of buyers has gone down significantly, the people that's left can still buy a $400,000 house. I'm just saying. Hi. I was working 3 jobs during the shutdown, stacking that cash. A lot of people were doing that too. So they had 2 or 3 full-time jobs. I have a live stream that I did with 2 of my classmates. I think I was talking about is making money really that hard, something like that. It was about earning higher income, something like that. And my 2 classmates both shared with me that we, as a collective, because we all went to Auntie together, had a classmate that had 3 full-time 6-figure jobs. I was like, oh, I definitely majored in the wrong thing. I majored in talking. Okay. I don't know what I messed up. I messed up. I went wrong. But yeah, the people that were able to work from home, and you also have to recognize there was a study that said people that were able to work from home during the pandemic, I think their income was like $60,000 or more. Now $60,000 ain't no money, but back then it was okay. You could buy a $300,000. You can't do that now. So yeah, there's definitely a correlation. So the people that, I want to try and choose my words carefully, but the people that were already doing okay financially in terms of their socioeconomic status, they were able to capitalize on it. And imagine being married to somebody that could do the same thing. See, that's real bravado network. That's his thing. He be talking about, the people, they need to be married and stuff. I don't know. I ain't never been married. All right. How does the Dow go up mean? How does the Dow going up mean success for ordinary folks? It represents the value of 30 large companies. And well, I don't make the news. I just report it. Okay. And according to this, it's doing great. All the people making money in their 401ks, it's doing wonderfully. So yes, people invest. That ordinary people, like, I don't know how you define ordinary, but someone with a job that offers 401k and they choose to invest in that and in Roths and things of that nature, they're profiting right now. So yeah, it's doing good. I don't know. I don't make the news. I just report it. That's all I'm here to do. Let's see. Not paying your mortgage is a setup for failure. Okay. How do commercial loans tie into residential? If banks don't profit from commercial, how does that affect? I have absolutely no idea. I don't do any commercial loans. That is outside of my scope. But I can tell you for residential loans, they are tied to the secondary market. in the secondary market is all those investments with the Dow. The secondary market is like insurance, like life insurance. Y'all hear, and I don't sell insurance, but y'all hear about the people that be getting scammed, making payments on insurance, making $30,000 worth of payments over the course of 20 years only to get a $10,000 insurance policy, like stuff like that, they make money off of that. So it's tied to the secondary market. And if the secondary market or the market, y'all seen that big dip, when that seizes up, it's like, whoa, hold on a minute. We got to slow down. We got to pump the brakes. Okay. Now, what I can tell you is I'm not an economist, but I am an accredited mortgage professional. I do have a designation and I did study this. And so I'm very keenly aware of the mortgage cycle and how it works. If we are not able to sell loans, Sophia gets a loan from me. She closed on Friday. We're going to take that and we're going to sell it off to the secondary market. If the economy is on struggle street, there's a lot of, and I ain't going to get all in the details, but there are a lot of entities that's in this process that they go like, oh, whoa, hold on. We're going to shut down this warehouse line. We can't do this. This is too much. This is too risky. You got people not being able to work. How they going to make their payments? There were banks that one of the most widely known things is with the FHA loan, you can apply for a loan with a 580 credit score. It was banks that was like, absolutely not. Our new minimum is 700 credit score. Because they needed somebody to be able to buy the loans that they were trying to fund. So I don't know how commercial works, but I can tell you about residential all day. Yes, am I licensed for? I gotta get back with you on that. Hold on, let me find out. I've applied for some licenses recently and I don't know if they were approved. So give me like 2 seconds. I'll tell you exactly what states I am licensed in. Which, by the way, it is public information. When you go to the NMLS Consumer Access website, like if you type in NMLS Consumer Access, if you want to make sure that somebody is legit, you could go there and you can see like who they are, where they currently work, where they used to work, where they're licensed. So it looks like no, Florida is not on the list right now. I'm licensed in Alabama, Arizona, Georgia, Illinois, Maine, Maryland, Michigan, Minnesota, Missouri, New Hampshire, North Carolina, Oklahoma, South Carolina, Tennessee, Texas, and Virginia. So I have a couple more to add, but we'll see. Okay. Thank you for that. We're gonna definitely talk about the CPI. Give me a couple of slides. Yeah, they were. Those people back during the pandemic was buying multiple houses. They was living up north, coming. They were like, oh, my house, the house in Charlotte is twice the house of my size in New Jersey. I'll take 2. Twice the size for half the price. Yeah, that's exactly what happened. I'm telling you. You said some people bought houses when they weren't supposed to do so and now house poor. Well, again, what goes up must come down. So you're not wrong. You're not wrong. I don't disagree with that. But you also have to consider the fact, like, what did they do after that? Because our guidelines have remained consistent outside of that little window of time that I was telling you about. The guidelines have remained consistent. They haven't seized up to the point where it's like, instead of approving somebody with a 50% debt ratio, now we're like, we can't go higher than 45. We're not there. So, yeah, I mean, decisions. These are adults, and I treat adults as adults. I will say to somebody, now, y'all know, we don't care if you eat every day. And we're not factoring in your daycare for your twins. Or you have to put gas in the car. I tell people, I say it just like that. Practically verbatim. And if that's what somebody wants to do, hey, the Federal Reserve is not a government entity, it's a private corporation. Yeah, they're separate. They're not a part of the executive branch. Mm-mm. They are not. I don't know the answer to that. I don't know. I guess they were maybe like contractors, and you kind of do whatever you want to when you want to, as long as you get the work done. There are a lot of people now. We have to keep in mind that people with really, really high skill sets, they have significant flexibility as long as they're able to get whatever done. They don't have to spend an extraordinary amount of time to move the needle on the profits that the company gets. Like if my one job is to stay up on third shift to fix the system if it goes down for Walmart's website, you know. All right. I bought my house 175, now 300. The S&P is at record highs. Oh, okay. Thanks. 'Cause I don't know. The MLS list is on a deadline and needs more competition. What you mean? What do you mean with the MLS? Are you talking about the realtor commissions? The fools that listen to the Crash Bros missed out on 6 figures of equity waiting for prices to fall. That's exactly what happened. So, and they have shifted. So if you all are unfamiliar with the Crash Bros, they are a group of people that's, like I said, they're sitting in there waiting for things to collapse, and it hasn't happened yet. And so they were saying, y'all are crazy, y'all are crazy, y'all are crazy. The prices are going to crash. You're wasting your money. Why would you do that? Buy when the market is low. This is ridiculous. This is crazy. So now they've kind of switched it up a little bit to talking more about like, you're crazy for buying with high interest rates. So, I mean, whatever. They ain't want you to buy with low interest rates. They don't want you to buy with high interest rates. I don't know what they want you to do. I'm not really sure where that's supposed to go. Thanks for explaining them. Okay, cool. All right, y'all. So, the update, the houses they have sold. Oh, okay. Now I will say that well, no, that's a whole separate conversation. I don't want to go down that path. But the NAR commissions, there's a lot that's going on. There are definitely probably going to be some changes with the MLS for sure. I could completely see that coming. But with the economy being strong, y'all, the economy is obviously going to be measured by, how much the profits are that companies are making. And for companies to be able to make profits, that means that people had to spend money, right? And so people have to spend money, and the only reason why they would not be spending money is if they did not have jobs. So let's take a look and see how are jobs coming along. Let me find that. Because again, people don't realize that is this it? No. Wrong chart. Is this right? Just kidding. I think this is it. Hang on a second. Okay, I was right. Okay, so the jobs reports. So we had jobs that were created last month, excuse me. In the month of April, in the month of April, which y'all, it's a lag, so they have to see what's going on. So there were 175,000 jobs that looks like they were created. And if you look at the trend of this, it's kind of up and down and up and down and up and down. But we are certainly a long ways away from what life looked like in February of 2022. Interest rates certainly started going up. I remember there was about a week in May when I was like, oh my gosh, what is the rates? Wait for me. So the interest rates definitely started going up, certainly did have an impact on the jobs creation. But we're adding more and more jobs, and I guess that's okay. But what I don't know, and again, I'm not an economist. I'm over here, I'm just talking. I'm thinking that it's not going down as fast as Jerome Powell wants. Now he's the talking head for everything. He tends to come out and he makes comments. Things are not going down as quickly as they want them to go down. Jobs go down as quickly as they want the jobs to go down. And in such, I think it's because of what we talked about a little bit earlier, with people having multiple jobs at one time, because they're following the unemployment rate. Hang on 1 second. I'm gonna give y'all that too. They're following the unemployment rate based off of people that are calling the unemployment line when they lose their jobs, and they're filing for unemployment. And people apparently aren't doing that enough. Well, in the way that it's going to be a significant enough shift. Wrong graph. Sorry, just kidding. It's not a significant enough shift for them to start to change their policy and to start pivoting to start actually lowering these interest rates. Hang on. Let me see. Where is that thing? Oh, child, I'm over here struggle streaming, honey. Yes, she is. Is this it? I can't wait for this to be wrong, too. Okay, it's right. So we're here. 3.9% is the unemployment rate, and that is down from 6%. It's down from 6%. That's a good thing, right? So it needs to be a little bit lower so people can stop spending money. So for the market to break and for things to start pivoting another way, we have a couple of things that can be controlled, which again has nothing to do with the president of the United States of America. It is interest rates and employment rates. As people stop spending money because interest rates are going up, companies are going to lose profits. And as companies lose profits, they got to let some dead weight go. And I know I see on the news all the time, they're like, this tech company, this .com, they laying off 10,000, 2% of their people, 3% of their people, because they have to report this information. It's public. They have to report it. Yo, I don't know. They adding jobs. I guess that's good. I don't know. We're at 3.9%. I guess that's okay. You can see it got a little bit of an upward, a little right there. But it's been down significantly lower than it was in, in 2021, the unemployment rate, which it was never supposed to be that high of an unemployment rate anyway. So that's that on that. But while jobs apparently are being added, while people are allegedly still feeling like they poor, they broke, or things are unaffordable, or they're feeling angry about everything, what I'm starting to notice is that people keep saying something that I can't understand. And I would love for somebody to tell me, because I asked TikTok and I ain't getting no views on it. And they ain't answer my question anyway. What I'm noticing is that throughout this entire hour that I have talked, I feel that I have provided a concise timeline with a good amount of detail and a narrative that says, okay, we were here, now we're here. Well, how is it, or what is it, when people go in the comments, when people are upset and frustrated about the price of things, and they're like, it's Bidenomics. What is Bidenomics? Because I'm dead serious. I didn't Google it. I don't know. I want people to tell me, because I feel like I have a general idea just from using my context clues, but I don't know what it means, because people, they keep saying it like People are upset and they're frustrated, and it's his fault because he got some sort of like economic policy. Now, let me be clear. I'm sure he does have an economic policy, and I'm sure he is doing something. But every time I turn on TV, he talking about student loans. And every time I turn on TV, Trump talking about his court cases. So I'm not really clear on what anybody's strategic plan is to try to normalize the economy to the point where people are going to be able to comfortably buy houses again, which is what I was saying when I sat in my kitchen back in October, November, and I was like, oh my God, this is it. This is really it. People that make a certain amount of money, they ain't ever going to be able to buy a house. This is it. And I mean, it's not me making this up. It's the truth. Things are becoming more and more expensive. So somebody talking about the CPI. So I want to get into that, and then let's talk about a solution, because I don't know. Like, are y'all okay? Are y'all okay? Because again, we keep. Did I mean to say the inflation to go down? So people need to lose their jobs. Yeah, that's exactly what I meant. Yes, people need to lose their jobs. The market had okay, hang on. I'm a little bit out of order. Hang on, give me 1 second. I'll swing back to that. All right, who is this? See you on the side. You say it only takes you 4 shifts at your second job to make your mortgage payment. See, people are out here making money. They definitely are. Hey, purposeful position, girl. This is very unusual for me to be on a Sunday. Prices are falling. How far before the interest rates drop? What prices are falling? Well, we're gonna tell he hasn't pivoted yet, because I just told y'all things are good. Things are great. They're still adding jobs, even though he's not really wanting them to add jobs. The economy is strong. It's robust because people buying stuff. So they must be making money, right? If people are buying stuff, isn't that what that means? Oh boy, I think jobs report is counting the ones that the severance from that job. But once you have okay, let me make sure I understand. So once you have severance, once that severance ends, because that doesn't count. But once your severance ends, and you have to, I guess, then start filing. You can't double dip. You can't get severance and unemployment at the same time. And in this economy, the one that's so strong, in this economy, I mean, it's not like people can quit a job Monday and get a job Friday. It is taking people a long time to find a job. Now, if you're in sales or some sort of commission thing like that, I'm not talking to you. But if you somebody that you go on that profit and loss and they like, oh, absolutely not. We ain't got it. We don't have the money to spend. We can't afford you. And then when you try and go get a $12 hour job, they're like, ooh, you too qualified. I mean, I don't know, but I don't know. Like I said, I don't make the news. I just report it. I don't know what they want, but I just know that those are the economic indicators that they're looking at. And I don't even want to get into like these the car payments that I'm seeing. I have 2 full-time jobs. One I work from home, the other one in the hospital. But LinkedIn just played off, and so did Google. Oh, laid off. Okay. And so did Google. You have restaurants that are closing as well. Now, okay, let's be honest, y'all. The restaurants that I saw that's closing, they should have been closed. How is Arby's still in business? I think the government needs to look into them. And Hardee's too. No shade. I'm just telling the truth. I'm just saying, because I don't never see nobody there. And IHOP. But whatever. The price of food is skyrocketing. So there's something that they are calling greedflation. There's another word now called shrinkflation. Because greedflation and shrinkflation are basically putting Americans in a situation where they're spending more money. No, if it's the same amount of whatever it is that they were buying before, or whether they're spending more, or whether they're spending the same amount from before. But the size of what they're getting is smaller. These companies are going to make their money and they don't care. They're not worried about you for whatever reason. I mean, I guess they figure, well, y'all got to eat. How bad you want to eat today? How hungry are you? How bad you really want to feed them kids? Oh, prices in Maryland are not falling. They ain't falling in North Carolina either. I don't know what they're doing. Them prices ain't coming down. Okay, y'all talking to each other. More jobs are being added, but they're not full-time jobs paying a living wage at that. Overall, the economy still won't get better. Well, again, the people on the picture is not feeling aligned with what you as an ordinary citizen are feeling. And that's what's guiding the decisions that he's making. Because like I said, remember I told you at the beginning of this year, I was hyped. I was like, oh shoot, the rate's about to come down. Oh, they didn't. Because every time it seems like he's about to pivot, some good news comes out. But good news is like bad for the purpose of him pivoting. So I don't know. The tech sector got hit big time over the last year or so. Quite a few U.S. citizens working remotely. Yeah, they felt it the most for sure. I have a friend that he works in tech, and he's saying that he feels like a lot of people that like moved to certain cheaper regions with those type of jobs, they're being choked out because the market, like what they're paying now isn't really what they should be paying. They're paying lower than what they really should be paying for that market. And I think he said that the goal is to choke people out, to be like, okay, go on somewhere else. Find somewhere else to work. Find somewhere else to be. Because the wages that people move from the north to the south making, thinking that they were going to continue to make that same money, which is strange to me. I don't know why people thought that, but they did. They moved from up north, bought a $600,000 house in South Carolina. Why would you do that? And okay, now you don't work at that company no more. What you finna do? What is your plan? Because South Carolina don't command those type of wages. So what we doing? But everybody's working remotely. And these companies, they caught on real quick. And a lot of people can't understand. I saw this on TikTok. Somebody made a comment like, well, why would you tell the companies that we don't live there anymore and make us get paid less? One guy tell them, y'all, they know what that computer is? What you mean? I remember Wells Fargo. I think it was Wells Fargo, Bank of America. I saw on Instagram maybe about a year and a half ago that said everybody got to come back to work. And they were like, next week. Like, it was quick. And people scrambling. What am I doing? And I commented on it, and a girl that worked in HR, I don't know her in real life. I didn't even know her up until that point. She gave me a DM and she said, Joy, we've been telling them people that they needed to come back to work for over 6 months. We know that they don't live where they keep claiming that they live. Oh, time's up. So all them people that was making all that money from, all those other regions, things have certainly slowed down, especially, like I said, if you're in that tech sector for sure. They always blame whoever's in office, but we were overspending money and not saving. They do always blame whoever's in office, but it's a delayed reaction. It always is. It always is. It takes time for things to catch up to something that's happened. But whatever, that's fine with me. Like I said, I'm not on the ballot, so it is what it is. Yeah. So look, let's talk about this right quick. The measuring stick of if things are considered to be expensive or not. So earlier when I said everybody had money, you had the PPP money, you had people having a significant ton of money that they were getting in unemployment money they never had, even though they was working. Everybody ran out and bought stuff. Y'all remember that whole toilet paper craze? Everybody ran out and spent every dime of money that they had for this amount of stuff that was available. You had this many people trying to get this much stuff. And so not only in the housing market did it exacerbate an imbalance between the supply and demand, in everyday goods, there was an imbalance in supply and demand. If you recall, people were trying to buy new cars. Let's say, I don't know, I'm making this up, a 2021, I don't know, BMW 3 Series. And they're like, ooh, it's going to take a while because we need the chips to go in the thing to do the car to make it go or whatever. I don't know. Your car not coming for 8 months. 8 months? Yeah. Sorry. It's a back order. I'm sorry. Because everybody was like, I want a BMW too. And not only that, we just talked about how people were being laid off. People weren't at work. It was an imbalance on all fronts. Everything in the supply chain was being impacted. But people didn't care because everyday ordinary people don't know. We don't know that. Why would we don't understand those things. We just know we want the thing. And we want to go get the thing. Y'all remember back in the day when Amazon could show up the next day for real? And then now it's like, we hope it come the next day. It's still not right. However, there is a measuring tool that they use called a CPI. It is the Consumer Price Index. And the Consumer Price Index is very interesting when you learn a little bit about it. Consumer Price Index, and I talked about this before, but it is, oh gosh, I'm going to get the wrong screen. It is a measurement for the price of a basket of goods. What's a basket of goods? Child, I don't know. It's goods. It's stuff. It's the stuff that people buy. Hang on. Is this it? No. I know I'm going to give y'all the wrong graph, so just be prepared. Be prepared for it to be the wrong one. So it is I got it right. Okay. It is, because some of the graphs look alike and I can't make them out because they like this small. So it is the price for a basket of goods. And you can see on this graph, so the dark line, the dark blue line, I hope y'all can see it, represents all items. It represents everything that you buy: clothes, shoes, coffee, gas, food. But what's very interesting is the number that they are measuring things by is not that dark blue line. That dark blue line is telling a story. That dark blue line is saying shit is out of control. That dark blue line is saying, oh my God, like, I don't have an extra $6,000 to spend this year. But that light blue line is saying, you don't have to spend an extra $6,000. What are you talking about? What do you mean? It's not that bad. It's not that bad. Because the CPI does not measure energy cost or food. So when they're saying we need to get inflation down to 2% or 3% per year, I think it's 2% as a target. When they're trying to take it from being 9% year over year. So one, let's talk about how they measure it. It is the cost of my wine or my wine glass from May of 2023 to May of 2024. Last May, I could have gotten my Apothic Red, which is what I'm drinking, for, I don't know, I'm making this up, $15.99. Okay. This year, it's $16.99. It doesn't mean that the price of goods don't go up year over year. It means that it is slowly going up. It's going up at a slower pace. So remember when I said I had that moment with myself when I was like, oh my God, this is it. When they keep saying inflation is coming down, shrinkflation, the greedflation, whatever terms we coming up with now, it doesn't mean that prices are reverting back to what they once were. It means that things are still going up. They're going up like this. They're not going up like this. And you can see in the graph, they was going up like this year over year. Okay. So what he's saying is we can't sustain stuff going up 6% every single year. We can't sustain stuff going up 9% every single year. We can sustain things going up 2%, 3% every year, which is why there is an imbalance or a misalignment between the prices that you're seeing when you're going to buy things and how much money you make, because COLA, which is like cost of living increase that people get every year, you get a 2% wage increase, a 3% wage increase, because it's supposed to keep up with, okay, you want these Oreos, you can still buy Oreos. You ain't got to cut that out the budget. Go get them Oreos, girl. You want your wine, girl, honey, you know, I got my little Olivia Pope action going on. If y'all caught that, you know, she was good for her white with her red wine. But, you know, you still want to pretend to be Olivia Pope, girl. You can still pretend to be Olivia Pope. Now, somewhere around 2022, I couldn't eat bacon no more. And I couldn't eat oxtails and crab legs no more. In 2021, life was good. It was okay. Remember, people were still at home for the most part. People were still at home in 2021. I think life didn't really for real return to normal until 2022, which is why you see things like skyrocketed. Everything is back online again. And it went up and up and up and up and up. And then he said, oh God. Remember, I told y'all in 2022, look at this graph and think about what I'm saying. The Fed, whose job it is to make sure that the economy not too hot, not too cold, saw this happening. You get these reports, they be having meetings and stuff, they talk. And he's like, oh, 5%. Whoa, this is out of control. This is, whoa, we need to slow down. President told him, big dog, bet not. You better leave it alone. You gotta chill. Right? 22, he said, okay, we got to fix this. We need to start raising interest rates so we can get these numbers to come down. And he raised those rates extremely rapidly. So rapidly that if you thought you was going to buy a house and close in October, but you started your building process in February, by the time you got to October and locked in your rate, baby, you was not buying that house. Your affordability was impacted that much in that short amount of time. It impacted me when I'm like, y'all all right? My life was fine. Y'all see when my life took a turn? Everything was fine. 21. Okay. Stuff is good. 22, not so much. Okay. The vacations had to stop. People started talking about how much eggs cost. Well, yeah. Interest rates were too low for too long. Not only were interest rates low all during the 2010s, but the beginning of the 20s. He was like, whoa, hold on. Hang on a second. What we going to do about this? And something recently happened. Now, y'all know it's an election year. Okay. And I'm not a conspiracy theorist. But you know what's very interesting to me about this graph? What is so interesting to me about this graph is, I had to sneeze. What's so interesting to me about this graph is, while we living up here in the blue line, and they living off the light blue line. The blue line and the light blue line, we see here that things just kind of tick down a little bit. I'm like, oh, things must be getting better. Things must be getting better. They have to be. Things are not necessarily getting better. But you know what they did? They adjusted some things. They moved some things around. How much are things getting better by? From 1 month to the next month, how much do you think things are getting better by? Absolutely negligible numbers. But hey, if they like it, I love it. Who am I to tell them that they wrong? Between April 23 and April 24. Again, I hope this is the right graph. Between April 23 and April 23 and April 24, things only went up by 0.3. That was the change, right? So y'all listen to this. In order to get the consumer price index down, I told y'all they measure it by everything except energy, which is gas, which gas is out of control. And Joe Biden just announced that he was going to try and release 1 million barrels of oil, but that ain't enough. That's going to last a day. But that's another story for another day and also another channel. But food costs, right? Well, now I know this ain't technically food, but I don't think it's fair to change the rules in the middle of the game. And to get the numbers to go down, they are now deciding that they are not going to include the cost of coffee. Now, y'all know we love a good Starbucks, okay? Ain't nothing, ain't no unemployment rate, ain't no CPI, ain't no Dow Jones gonna keep us away from Starbucks. So they say, you know what? Let's take that out. Okay, let's remove that. Ta-da! Oh. Okay. Now, obviously, I'm oversimplifying it, but they changing the measuring stick. It's moving. So I don't know, y'all. I don't know. Apparently, people are still spending money. People are still having a good time. The good times are rolling. Y'all on Instagram going on vacations because apparently y'all making way too much at your jobs. What we gonna do? Are y'all okay? Because I don't think you are. So in my job, not only do I do purchases, I do refinances. And in refinances, while you might be like, who right now with an 8%, 7% interest rate? A lot of people are. A lot of people are refinancing right now. And to keep the good times rolling, and I don't even want to say that because it's really not only just to keep the good times rolling, but to continue to survive and to live and to do the things that you were doing before and to eat and to buy groceries every day and to pay your light bill. You got to get the money from somewhere. You might have been impacted by a layoff. You know, maybe your job said, well, we're not going to lay y'all off, but we're going to reduce how much money we're paying you every month. Maybe. So they're like, well, I got to get the money from somewhere. So where y'all think they getting the money from? Where could the money be coming from to show this robust economy that I showed y'all at the beginning of this conversation? Remember, we're doing great. We're doing great. Things are wonderful. Where is everybody getting all this money from that's causing the inflation to not be able to go down, even with them manipulating the numbers and saying, well, we just not going to include the coffee? I'll tell you. I know y'all know the answer, but I'm just go ahead. Spoiler alert. It's the credit cards. I can't print my own money, but baby, I can swipe it away. I don't even need no credit card to swipe no more, baby, because, baby, look, this Apple Pay. I don't even need the card. Ping. Apple Pay. Thanks. Right? We got the wallet with all your favorite credit cards. I go to church. Y'all, I'm dressed from church today. Over there around to the St. Paul Baptist Church on Allen Street here in Charlotte. Y'all please go subscribe to our YouTube channel. But anyway, over there around to the St. Paul Baptist Church, when it's time to give, they be like, it's time to give. And like, woo, it's time to give. And they go through the whole 10%, whatever. And they say, they pass the basket around, which people I guess they don't use the basket no more, I don't know. But we have an app called Givelify, and the pastor says, all you got to do is download the app to your phone. He says the same thing every time. Download the app to your phone, Givelify. When you go there, you select St. Paul, you're going to see the pastor's face. It's going to be wonderful. You go, hey, you put that, and he say, attach it to your favorite credit card. And you can give. And we put our hands up. Hey, thank God for everything. Thank you for this. Thank you for that. Woo. All of the things. Right from the phone. Attach it to your favorite credit card. You can tithe from a credit card. Now, I don't know anybody who does, but I'm just saying. You could if you wanted to. Apparently. It's a thing. So, what are we doing? Are we okay? Are we really okay? Or have we been trying to figure out ways to cope with being so angry about being broke and feeling betrayed? Because I feel betrayed. My life after the pandemic, and I'm going to drop the link. I would love for y'all to come up and talk. My life after the pandemic is completely not what it was before. But people are continuing to swipe their credit cards, and they're going into credit card debt. $30,000, $40,000, $50,000, $60,000. Personal loans, credit card debt. And I'm not talking about poor people. These people making $100,000, $145,000 a year. It's okay to say that you're not okay. You don't have to live life like you on Instagram. Because there's no way that people are okay under these conditions. When people want to say, I'm buying a house, interest rate too high. That'd be them 800 credit score people. The 800 credit score people, they like, yeah. Circle back when y'all got some sense, because you can't talk to me crazy like that. Do I got some 800 credit score people in the chat? Because that's how y'all be acting. Y'all too good. We cannot talk to them any type of way. All right. But y'all, look at life before and after the pandemic. Y'all see that little blue bar right there? The little blue bar, y'all see it? And this was just last week. 2 weeks ago, May 14th. Y'all see the little blue line right here? This COVID right here. life was fine. We were charging a little bit, whatever. And I guess here, things went down. People, I guess maybe did y'all all pay off your credit cards with all the extra money? Is that what happened? Maybe. I don't know. You didn't need to use your credit cards because, oh, I know what it is. One, you didn't need to use your credit cards, but interest rates was at 2%. And because interest rates are at 2%, y'all do understand when Jerome Powell raises interest rates, that raises the rates on the credit cards too, because they fluctuate from month to month. And while people are on the internet laughing at people that are buying houses or they have bought houses, laughing at them thinking they so stupid, I would never pay 7%. These rates are so high. Okay, that's what's up. These rates are so high to have somewhere to live. The rates are so high for you to have somewhere for your children to live. The rates are so high. You just absolutely, I'm going to rent because you feel like you're getting played. Oh, okay. Because you know what other rates are going up too with the cars. Yeah. Yeah. I think the average right now for a rate for somebody that's buying a car is like, I'm sorry, the average payment, excuse me. I think the average payment for somebody who's buying a car is something like $700 a month as a payment, $715, something like that, because of the rates, because of the interest rates to get the cars. So it's fine for the rates to be whatever they are for the cars. It's fine for the rates to be what they are for the credit for the credit cards. Can y'all hear me? Because my mic went out on my other thing. Can y'all put a 1 in the chat if y'all can hear me? It might sound different, but can y'all hear me? Put a 1 if you can hear me, please. I don't know why they hating on me. Okay, thank you. I'm going to try to reconnect my mic. We'll see what happens. Hang on, let me see. Okay, can y'all hear me? I hope so. All right, anyway. Okay, y'all can. Good. Thank you. But look at this. So the average rates that people are spending on the credit cards is almost 21%. And here go the gag. So people are calling it like, oh, Joy, I want a HELOC. I want an equity line of credit. And I'll be like, oh, your credit too bad. You can't get no equity line of credit. Why don't you do a cash out refinance? I do the numbers or whatever. And yeah, you're not going to have your 3.5% interest rate no more. Your rate going to be like 8%. It's all good. But you saving like $900 a month. And they like holding on for their dear life to that 3%. And then they'll say something like, well, I don't want my payment to go up. No, they'll be like, oh, well, I don't want my 30 years to start over. But mind you, I want to be real clear. The people that be calling, these people, they just bought houses in 2020, 2021, 2022. It's really not people that bought houses in 2015, 2016, 2017. Most of the people that are wanting to refinance are people that bought houses in like 2020, 2021, like that time frame. They don't realize that this 20% interest rate on your $60,000 of credit card, you making a minimum payments. When you open up that statement, it tells you that you're going to take another 21, 22, 23, 24 years to pay that card off. Some people waiting on student loan forgiveness. They don't want to roll that in. Are y'all all right? Are we okay? How are you feeling about the state of the economy? Like, I done laid it out. How are we feeling? What are we going to do? What is our plan? Because, baby, life is not a crystal stair right now. It ain't. It might be for somebody. Can y'all hear my neighbor's dogs? It is very ghetto outside right now. I'm just saying, it sounds like a gin and juice video going on or something. I don't know what's happening. It ain't even that type of neighborhood. But anyway, are y'all all right? Let's talk about it. Let's talk about this. So I'm finna drop the link. I hope somebody want to come up. Y'all come up and talk to me because I've been talking. I'm tired. I'm tired of talking. I want to hear from y'all. I want to hear from y'all. I want y'all to tell me how we feeling. Now y'all know they're gonna link. I don't know how to pin it. I don't even know how to make nobody a mod. I don't know how to do this. But y'all see the link. Please come up, talk to me. Tell me how you're feeling. How is your life different from before to now? Because the housing market is going to continue to go up. If you're hoping that with all of the things I just told you that it's all of a sudden just going to fall off, it's not. It ain't. I think the jobs report. Oh, hold on. Did I already say this? Yeah, I did. I did this. Oh, I lost my comments. Let me see. I read this. Yeah, I hope that gave you a little bit more clarity because yeah, it is definitely a nightmare. Until we have the spending slow down. Spending is not going to slow down until a couple of things happen. Now, the one thing that I did not talk about, that I did not tell y'all, is that I saw a statistic that said that the United States is $34 trillion in debt. Now, United States, like the United States. And we are adding $1 trillion every 30 days. And the only way to pay the debt off that we are in, like the United States of America, not the citizens, is really to raise taxes. So that's more money that you're not going to have in your check. What we going to do, y'all? What we going to do? I look at these graphs and to see like on paper how sharply different life is. And again, I'm not talking to the people that got their life together because they perfect. They planned for this back in 2002. They knew this day was coming. I knew it was gonna happen. I knew one day it was gonna be a pandemic and it was gonna come from China. And I knew that we was gonna have a celebrity for a president and he wasn't gonna know nothing about the government. They was gonna have to teach him how to run the government and how the government works because he understand checks and balances. I just know. So what I did was I got me a second job, honey, and I bought me a house. And I didn't buy a house for $150,000. I bought me an $89,000 house. I knew that the price was gonna be $400,000. I'm not talking to the people that knew all of that. I ain't talking to you. Okay. I'm talking to everybody else. Regular schmegular people. Y'all, what we doing? Yes, stagflation too. We got a lot of problems. Let's see, Go Mike, what'd you say? A lot of these restaurants were on the decline, but the PPP money brought them more. Okay, so let me tell you. So I have an IHOP. It's sort of near my house, but I've never seen anybody at IHOP. So I kept thinking they gonna go out of business, even though they had the PPP. So I guess they had a PPP. No, but didn't the companies have to pay the money back? They had to pay the money back. I think it was forgiven for citizens, wasn't it? But like major companies, because I remember, because y'all know, again, the fiscally responsible people that always have money set aside, they have the 6 to 12 months of emergency savings. Again, not talking to them, but I remember when what is it? The Cheesecake Factory. They was the first ones to be like, we ain't got it. What? What you mean you ain't got it? The miso set, it was like $22. Got it. You got it. So I figured, and I told purposefully positioned. We was on the phone. I was like, yo, Susie Orman is really running a scam. Had me thinking that I'm in the wrong. She need to be talking to these companies. They ain't got it. So I don't really know. I don't know. You said people are tired of getting boned on food, paying $30 for small rice, a piece of lobster, and a piece of chicken, chilies and wrap. And the food ain't even that delicious. I mean, I think either my palate has just gotten more refined over time, or it just is really nasty. Like I think I remember a long time ago I worked at TGI Fridays, and I don't know if y'all remember they had like endless appetizers. That was the beginning of the end for TGI Fridays, because I remember they switched out their vendors and the food just didn't taste as good. I remember that clearly. Companies overall are going to do whatever they can to reduce their costs, layoffs, wage reductions, cutting overtime, raising prices for goods and services in order to stay afloat. Yes, they are. But the economy is great because we keep spending. So the companies are making adjustments, but apparently we're not. Is that fair? Do we think that people are using credit cards because they want to or because they have to? Okay, you are correct to recall. Correct. The recall to get back in the office is a mechanism to have people retire, and they want the resignation. Now that is interesting. I didn't consider that, because I guess it's cheaper for people to resign. Is that for older people they would retire. They do early retirement, but they would still probably have to like pay them out like something to entice them, to make them like feel a little like, okay, if we give you like this extra $15,000, will you go quietly into the night? I don't know, but that's interesting. Yeah, they definitely knew. They knew how the people had moved away. And then if you move from New York to Idaho, I mean, you don't need a New York City wage anymore. And people were really feeling insulted. Why would you think that they would let you keep living high on the hog? Like that's not what we do here. Pernell Ponder, I like this live. Thank you. That's hey. Thanks. I'm glad you like it. I be wanting to go live more often, but child. If y'all would have seen, first of all, if you see the number of chords, and if you would have seen how horrible I was at remembering how to put this thing together, and if you would have experienced the frustration that I had when I couldn't get my mic to work, I was like, Jesus, why am I being hazed by this YouTube equipment? But people are in a lot of credit card debt, and they are doing these cash out refinances, and they are trading in their 3.5% interest rates with a smile to lower their debt to income ratio from 62% to 38%. They can afford to live. So again, crash bros. And let me be extremely clear when I say this. Cash out refinances are available, at least at my company, for people that have 500 credit scores. People are entering into these debt relief programs. Come on, baby. Don't even worry. We'll pay that off too. You will? I'm paying $700 a month in debt relief. Okay, it's fine. Don't worry about it. It's okay. It's cool. Imagine spending $700 a month in debt relief, and then you calling me not to get a cash out refinance to consolidate your debt, but you calling to get a cash out refinance to do home repairs. I want to do some renovations. What? You want to survive? What are you talking about? We do that too, girl. Come on, let's roll this debt together. You got a 542 credit score, child. Yeah, I see all your cards is maxed out. It's okay. It's all right. You're going to be fine. I'm going to take good care of you. Okay. You trust me? Yeah, I trust you. Okay. Just be cool. Let's breathe through this together because you're not by yourself. It's the truth. People are trading in they low interest rate because when you write that check every month, you don't write a percent. You write a dollar with a comma. Okay. They be behind on the credit cards. So whatever. Companies also want employees back in the office because they've been quiet vacation. Okay, they have been quiet vacationing. I saw that. I saw that like Friday. They were talking about millennials doing quiet vacationing, and you know they had the quiet quitting, and then they got loudly laid off. They said, "Oh, we see you, and we're gonna raise you 20. Okay, we're gonna loudly lay your behind off. Have a blessed life." I'm just saying, y'all gotta stop trying to be so slick all the time. I understand that you want balance, but baby, them bills gotta come first, honey. All right, Sophia, I got a couple people in the back too, y'all. As soon as I get through these comments, I'm coming, y'all. Okay, Sophia said, getting people back to big cities is a must because all of these major cities are losing tax revenue. Yes. I hope so. They left to go to places like Florida and the Carolinas, which screwed the locals over and has caused. Come on this good Sunday. Preach the word on this good Sunday. Yes, the people that live here, y'all have driven up the cost of housing, and we don't like it. Please go back. I need that trend to start. I need it to be like, I don't know what the headlines will be called, the mass exodus, mass return, whatever it is, mass reintegration, whatever it's going to be. Please. Y'all. And what is so funny is like, I'm joking, but I'm not joking. But what is really seriously like, now all jokes aside, what's so funny is people didn't realize by doing that, you all are bringing the same circumstances to the city. Y'all bringing them high prices. But then people say in the comments, they like, you don't know what affordable means. I bet if you live in California, well, I don't. I don't live in California. I never have lived in California. Lucky me. Sorry for you. I don't live in California. Okay. So I can't relate. I don't know nothing about that life. But what I do know is our major cash crop was tobacco. And y'all got a little scared of a scratchy throat. And y'all stopped smoking. Okay. And so they said, well, we got to switch it up. And so they started having a lot more white collar things. Charlotte is now considered an affluent area. So if you think that you are coming to specifically Charlotte, I can't talk about South Carolina because I don't live there. Which side note is a red state and North Carolina is a purple state. But we have Duke University, which has a major medical program. We have, I think Google is up in Raleigh. We here in Charlotte, we just got our first medical hospital. What is it? Medical school. We just we're starting to see a lot of fintech come to the city. So we're starting to have more affluent jobs that command particular salaries. We were always like the banking hub, but I don't know. I just like my life before. I don't know. I want my life back. I don't know how I'm going to get it back. I don't know how we going to get there, but I want my life back. I don't know about the rest of y'all. If y'all like it on this side, then that's fine. You keep liking it, but I don't. It's not fun to tell people you need $100,000 to buy a house in Charlotte. Because then they looking at me like I'm the crazy person. Now, mind you, and I have this time stamped and recorded. If you want to peruse through my YouTube stuff, I've been telling people that you had to have $100,000 to live sufficiently, but didn't nobody believe me. I guess they believe me now. I'm with you on the Texas parcel field, but you have various entities buying up as many houses as they can to maximize the profit and rent for themselves. Okay, so with that said, I will say this to be fair, because I try to look at things from multiple perspectives. When you sit in my seat, I want you all to understand something. When people call me and they're like, oh, I want to buy a house, and I want to buy a house means that they only want to pay $2,000 a month for a house, but that $2,000 or that $1,500 house isn't realistic because that price point isn't available. To turn around and say, well, it's because entities are buying up houses to charge $2,500 rent. They wasn't never going to buy that house anyway. You can't take something from somebody that they was never going to get. That's what, from my seat, from my vantage point, that's what I see. You see what I'm saying? If people were buying up, let's say these companies was buying $1 million houses, nobody would say a word. You ain't buying $1 million house, so why you worried about it? The same thing. People misperceive what they can afford until they have a conversation and they know. I know from where I'm seated, they wasn't gonna buy them houses anyway. There are certain price points that are just completely just not available. I made a statement where I was like, if you live in Philadelphia and you think you finna come to Charlotte and get you $150,000, baby, you just stay where you at. We ain't got them. We don't got them. They're not available. If you think you can get you a $1,500 or $1,400 rent, it ain't happen. I mean, not rent, but mortgage. We sold the last one yesterday. I'm sorry. Now, be mindful. What I'm saying is based upon the time period that we're living in right now, based upon a 7.5%, 8% interest rate. If rates go down to 4%, we can revisit this. Okay, we can certainly revisit what I'm saying. But today, on May the 26th, 2024, today, now is not your time. It's just not. And statistics show that of the 140 million homes, there's 140 million homes in America. Those bigger entities that we're talking about, those investors, those institutional investors, only account for about 3% of all of the homes that are bought. Now, obviously, you can make money say whatever they want, make numbers say whatever you want them to say for a narrative, but just be mindful of that. Yeah, it's a cocoa bean. Yes. Quite literally, yes. It is. It's a cocoa bean. That's how they make. I don't want to say you know. Thank you for the super sticker, Sophia. She in the back, y'all. I can't wait to see what she has to say. People are maxing out those HELOCs. Yeah, they could. Yeah. Mm-hmm. Yeah. People are spending, I agree, in credit cards, and they're trying to live the lie as long as they can. I agree. Or wake up and see all the things going up. Following intuition. Start reducing your spending while you can. How can you? When people start talking about living below your means, I need y'all to explain. It ain't nobody told me what's Bidenomics either. I asked y'all, what is Bidenomics? Nobody told me. I'm waiting. I didn't ask multiple audiences. Please, somebody tell me, what is Bidenomics? No one has volunteered an answer, but people keep putting it in the comments. They hear this, they like, Bidenomics. What is it? Help me. Help me so I can help myself. But yeah, the way that people are living, I know people would like to reduce their spending, but you do have to eat. And I just had a long conversation with the store manager up the street for Harris Teeter, and I was like, y'all gonna force me to shop at Food Lion, which is a lesser cost in grocery store that's not nearly as clean. And I don't necessarily love the neighborhoods that the Food Lions are in, but that's my take on life. But whatever. But I'm just saying, like, how. And now I want y'all to know, all 51 people, I want to see y'all on Tuesday, because I'm going to invite someone on that is actually going to offer up some solutions. She's the finance maven. She has the Rosea Jamise firm. She actually just recently started a YouTube channel. I think the YouTube channel is the RJ Firm. She's very popular on TikTok. She has about 100,000 followers on TikTok, and she literally has a finance firm for Black women earning six figures to help them get out of credit card debt. She has an MBA. She is absolutely hilarious. We have very similar personalities, so I think it'll be a good time. But she is extremely brilliant, and she's going to talk about strategizing and budgeting, like, and make, put her 2 cents in, because she is of the belief that people should pay off their credit cards. You know me, child, just roll them things into your mortgage if you got one, if you can. That's my camp. And that's my camp because it benefits me. And I keep telling people, I'm in sales. Okay. Y'all don't completely lose sight of that. Like, I'm a good person. I don't take advantage of people, but a cash out refinance is not the end of the world. And when you get your debt to income ratio down to 38%, all your debt is paid off, your credit score shoots up, and you have an affordable payment. When rates come down, you could get a refinance potentially if you don't run your cards and stuff back up again, and if your credit don't go sideways. So there's a longer term play that's there. I don't use the wallet app at all. It's for suckers. I like to see the receipt. I don't want to know what I'm spending. I don't want to know. I think cash is good for that. My son just got a bank account, and because he's had cash, he got his first job. Jalen is my 15-year-old son. He'll be 16 in August. He just got his first job, and my sweet little baby, bless his little heart, he getting ready to find out that money just don't fall out the sky, and I am enjoying every second of it. He gonna swipe that card. They're gonna be like, decline. And I can't wait. We're gonna be learning some lessons, okay? He's gonna learn some hard lessons real fast about money management. But yeah, I ain't gonna hold you. I don't be wanting to know all this. By the way, if your credit score is great and improved greatly, call your insurance. I had them run my credit during the renewal, and it got lowered from 179 to 110 of full coverage. Any way to save. That is a phenomenal recommendation. That is phenomenal recommendation. I love that. I didn't think about that. You're right. Y'all do need to shop around regularly, annually, for different insurances. So please do that. She is absolutely right. Yeah, because they do go off of your credit to see, if you are more likely, I guess, to get in an accident or something. I don't know what that means. IHOP closed around me. All the IHOPs need to close. Now, y'all, I love Cracker Barrel because that mama's French toast. Don't play with that. Don't put that in danger, okay? CPA here. PPP was forgiven. Oh, okay. So it was 2 different things. What's EDIL? I'm gonna tell y'all what I know. One thing about it, 2 things for sure. Y'all, I'm about to call some stuff out. I'm pretty transparent, okay? I don't mind telling people, like, when I'm up or when I'm down. I'm a regular person. Everybody is regular. And I hate the fact that in society, we view normal life cycles as failures. Companies experience them all the time. Human beings are going to experience them too. And I'm going to tell you what I know, not what I heard. A lot of the people that y'all are trying to aspire to be, they lying. They got equity lines of credit in real estate. They selling off their houses in real estate so they can keep flying here and there and everywhere. I'm telling you what I know, not what I heard. You cannot believe the stuff that you see on social media. You cannot believe it. I'm saying, especially people in real estate. They like, everybody's buying houses. No, they're not. People are buying, but don't don't let them people fool y'all. Chili's is shutting down all their restaurants. The guilty tipping at fast foods became inflated. So let's talk about it. What is this? What is this tipping culture that we have? Because I was somewhere the other day. What was it? Where was I at? I was somewhere and I was surprised. I was like, tip? Are you crazy? No. Next. It didn't make sense to me. The Crash Bros are screaming the prices are too high in 2017 and they make money off clickbait for the fear mongering. Yeah, they do. They sure do. I mean, y'all, I've got a journalism degree. If you don't know my background, I have a journalism and mass communication degree from North Carolina A&T. And one of the things that I remember the most about journalism was, if it bleeds, it leads. And another thing that I have learned just about life, when people are scared, they listen. So the headlines that are gruesome and sexy, you like, ooh, and the headlines that make you be like, what am I going to do? People are all into it. They love it. It sells papers, it gets clicks, it gets advertisers. Okay, people are gonna need to get creative in the kitchen and reduce that grocery cost. They are. I ain't that creative. I get all my recipes from Divas Can Cook and Smoking and Grilling with AB. Baby, if you ain't been on Smoking and Grilling with AB's website, if you ain't been on his page, if you ain't bought his cookbook, if you ain't been on his YouTube, you best get over there immediately. It'll change your life. It will. So let's go ahead and bring some people up from the back. Let's talk about this. I'm bringing up Sophia first, and I got the Real Bravado Network back there as well. Sophia, you ready?
Ready.
Hey girl, how you doing?
I am good. I love your channel. It is a wealth of knowledge, and I'm so happy to have found you.
Oh, you're so
Um,
sweet. Thank you.
I am just taking in all the information because I want to buy a home in
Mhm.
2025 after the election. After hopefully things go, I'm in South Florida, so hopefully things get back to some
Ooh,
sort of normal.
it's
Um,
expensive down there.
It's beyond.
Mhm.
But I would love it if you one day did a home buyers course to help us, figure out how to read, a loan application, how to figure out pricing. That's something that I'm not getting. Like everyone's always talking about, it's not the interest rate, it's the
It's
pricing, and just how to get more educated, before you get to that closing table and before you get all those documents that you really don't understand. Just
mhm.
shedding the light on what makes us putting us in the most favorable position to secure a loan and something that's going to work for us. I looked at some, what do they call it, the amortization schedules.
Mhm.
It scared the living, I'm not going to say it, out of me. I was like, this is
All
not for
the
me.
interest is up
This is
front.
not for me. I was like, maybe I'll stay renting for a bit.
Mhm.
I don't know. But, improved my credit, just got it up to 800. 4 years ago, it was at 580.
800 credit score
580.
people. She said, y'all heard her. She an 800 credit score person. She's like, not in this market. I'm going to wait. See how they do? The 800 credit score
You,
people, they are like, you cannot talk to me about no 8% interest rate.
but you know what it is? It's not only the interest rate. Someone on another channel, I finally understood when they said it's not really about the interest rate, because would you buy a Ferrari just because a $1 million Ferrari just because you got a
A good rate.
2% interest rate? No, it's about the cost of the house and then obviously the
Mhm.
pricing of the loan. But for me in South Florida, I've been, going into the new home building, all these new home builders, and that's the only thing that I could possibly afford, sadly. But my taxes would honestly be $800 a month. The HOA is like
Mhm.
anywhere from $300 to $500 a month. And then I'm like, thinking, I'm like, that's not even the principle. And what about, I'm trying to keep the house, ultimately for 20 years or so. But I'm thinking, I'm 40 years old now. How do I afford taxes going up, insurance going up, HOA going up? I can't even afford that. Just the basic price, not including the premium to live. So that's
Mhm.
what's scaring me, because I'm like, I'm not going to put myself in a hole where right out the gate I have to pay at a minimum $1,200.
So I will say this, and I talk about it frequently because it's something that is not discussed enough. I don't know what you do for a living, but
I work 2 jobs from home. I'm a recruiter and I work 90 damn hours a week.
a lot, woo, child.
Yeah. 2 kids.
Girl.
Yeah. Yeah.
So the thing is universally, and I have a graph that I was debating on, maybe talking about or not, I don't know. The wages in America, they haven't kept up, right? And there's wages that's broken out by ethnicity. And I can tell you, people, I did this on TikTok, and this the biggest TikTok. My TikTok got like 2.2 million views. And it's pinned to the top. I have been saying this for over a year. $100,000 is not enough money. Now, if somebody is in some town in Nebraska, I ain't talking to you. I'm talking about people that are in highly populated urban areas, Nashville, Raleigh, Charlotte, Richmond, DC, Miami, Orlando. If you live in Arkansas, baby, go off, sis. It's okay. You keep your $54,000. But what I'm saying is, we have to look at a few things that are happening in society. We are not getting married like we used to. And people need that extra check in the household to be able to afford real life. Excuse me. And when I was saying, what I was saying on my TikTok is the average purchase price in the United States across the board at the time that I reported it was about $400,000. The average income to be able to afford that on the loan application needs to be about $120,000. Okay. Generally speaking, somebody can afford about 3.5 times whatever their annual income is for a purchase price. There's some fluctuation based on interest rates or whatever, taxes, things like that, but this is generic. I'm not trying to sound negative. I'm not trying to discourage nobody, because people be like, people say, well, that's discouraging when you tell the truth. But the reality of it is, people gonna have to go into different careers. People are going to have to pivot from whatever it is. I was a school teacher. I taught middle school language arts. I taught 7th to 8th grade for 5 years. With a whole live master's degree in 2014, when I exited the profession, I think I was making maybe $40,000. If I would still be there, I would probably be at like 55 now. So I would still not be able to purchase a home unless I had a spouse, and I don't. So unfortunately, that is the solution. The solution is people are going to have to make more money. And like I said, I had 2 million posts, 2 million views. And I said, hey, y'all, people that make this type of money, please drop in the comments and say, what do you do and how much do you earn? There are tens of thousands of people that are volunteering. Hey, I do this, I sell that, I build this, I own that. And people are in the comments eating it up because they act like they ain't never seen nobody that's made that type of money before, which is extraordinarily possible. There are a lot of people that it's not in their proximity to see a certain level of prosperity. And it's very unfortunate. And for the people that don't know that it's possible if they pivot, unfortunately, people are going to be left behind. But you in HR, you make some money. The HR people, they make money. They have really good incomes. But overall, income got to come up. And it was so funny because I had somebody stitched my post. And a stitch is like when you take a piece of what somebody said and then you add your own 2 cents to it or whatever. And it was like a younger guy. He was so precious. It was clear that he was like new to real life because he was just so bright-eyed and bushy-tailed. He ain't gotten jaded yet. And he's like, we shouldn't be talking about making more money. We should band together. And I was like, oh, you're so cute. That ain't how it works.
No, it's not.
Prices are not going back. That's what I was saying about like inflation. The prices are not going back. There is no forecasted algorithm, no forecasted data. There is zero data to be able to support a substantial reduction in home prices to the point where they were prior to the pandemic, which is why I'm saying, y'all okay? Because I'm not. I'm not. People are stuck in their homes. They stuck. Where they gonna move to? Where they going? The incomes have doubled or tripled. Like, it's hard. So people are moving from one area to another area that they perceive as being cheaper, but then they getting upset when they like, wait, hold on. They don't make as much money. It's just, it's unfortunate, but it's a hard truth. That's it. That's the only advice, the only solution. But these home prices, they're not coming down. They up and they're stuck.
Yeah, in South Florida, they are ridiculous. They are, and I'm on the northern end of South Florida.
Average 645, 700, something like that is the average.
Yeah, yeah,
yeah. It's horrible. It's horrible, and I don't like that. I don't root for it. I'm not a fan of it. And people feel like I would be because I'm commissioned. I get a percent. That's cute. So can't nobody buy no house no more.
Exactly.
It's like, okay, like what's 1% of zero?
Exactly. So, and then
doesn't benefit me.
And you're competing now with all these in-house lenders with the with the new construction. So yeah, it's tough. It's definitely tough.
Don't get me started on this good Sunday. Okay. So the only other recommendation that I have, and people not going to do it, but to your point about the builders, they set the price. Because there are not as many existing homes to balance out the new builds. It isn't like the market is being driven by average sellers. It's being driven by how much money the builders want. Like, okay, cool. Here's the price, right? And they've done all the data research. They know what can be supported and what can't be. Oh God, I gotta sneeze so bad and I can't sneeze. Okay. They know. And so when they're coming into a market and they're starting the price point at $400 for 2,000 square feet, right? Homes are getting smaller and smaller now. Homes are getting more and more expensive. You're right. They are coming up with very innovative, creative, strategic ways to make it more affordable temporarily. The suggestion that I have is you, me, we, 53 people that's watching, people that may be watching when on the recorded version, you've got to engage civically with your government. The amount of lobbyists that and the influence that these builders have, that is why they're able to lock out lenders like me. They're steering people. They are bribing people. They are bribing realtors at this point. If you were to purchase a house right now today and you had a realtor, your realtor knew that ABC Builder was going to give them an extra $5,000 on their commission. to make sure that you use their lender. Not only are they going to say, hey, we're going to give you $20,000 in closing cost money to use our lender. Now you have our supposed to be partners, referral partners, right? They working against us. They like, hey, Joy, can you pre-approve Sophia? Make sure she good. We gonna go look for houses, whatever. Woo, woo, woo. And I'm like, yep, she's good for $475. The realtor ain't gonna do nothing but take you right over there thinking, yep, we good. I'm cut out immediately. I done got used. I done wasted my time, my energy, my company's time, my teammates' time to get you all the way through an underwriter and get you an underwritten pre-approval for you to go down the road, buy the new construction, and then they get more on top of whatever their commission was already going to be because they have now successfully steered you to stay with their lender. That is practically criminal. But they have lobbyists. And so what I'm saying is people, citizens, normal, everyday people, consumers, y'all don't understand the power that consumers have. The reason why the realtors are in the situation that they're in is because the one thing America will never stand for is when the consumer feels that they have been jaded, the consumer feels that they have been disenfranchised or taken advantage of. And that is why the CFPB exists. If citizens start to write to their government officials and saying, wait a minute, y'all need to do something to make sure that they are providing lower price points, they're going to have to. They have the ability to structure something that incentivizes builders to build at lower price points. But because people are so disconnected from their government and so jaded because they think their voice doesn't matter and they feel like, well, ain't nothing I can do. You can do everything. Like when I was in the 4th grade, they told me government means people. We the people. You've got to write to your local Congress people. The presidency is cute, but that is not the end all be all. Matter of fact, that is a figurehead. If they don't have a supporting cast to do anything that they have on their agenda, nothing is going to be done. The needle cannot possibly be moved. And we saw that as blatantly evident in 2008 when they came out and they was like, they're going to be the party of no. Okay, cool. I see you. But to just be like, dang, they can't get nothing done because you ain't voting for the right people. You're not voting for the supporting cast. If we, the people, say, y'all need to do something, y'all need to provide some tax breaks, some incentives, something to make them feel that it's still profitable to build $200,000 homes in Charlotte, or in your case, maybe 300 would be the floor for the purchase prices of homes. If we're not doing something, why would they care? What's the incentive?
Because what they're doing? They're doing as well. Now that you say that, it makes 100% sense, because on top of all the HOA and the taxes, now with new home construction, they have the CDD fee, which is like a double tax, the Community Development District fee, which is on top an extra $200 to $300 for 30 years. You have to pay because the developer decided to develop this land. So now the city doesn't have to take care of the roads in your new community. They don't have to take care of the sanitation, because your Community Development District fee, which is basically, I don't know, some sort of bond that you have with the city, you have to pay that as part of your taxes. So you're getting screwed and having to pay all these taxes. And I mean, I live in Port St. Lucie, which I think they say is like the 4th fastest growing city in the nation. But yeah, not including CDD, it would be $1,000 just in taxes on a $450,000 house.
I ain't know that. I don't live in Florida.
Yeah, it's crazy. It's crazy.
I have never heard of that. But yeah, I mean, everything's different in Florida. No shade.
But we do have to, we do have to go to those city hall meetings and have our voices heard, because a lot of the city officials are just getting being bought and sold by the developers, and they're making the market here, especially in South Florida.
I can't believe it. That I did not know that, but I'm sorry. I mean, you got to follow the money. Everything is always about money. I've learned that if you ever question something, just go follow the money trail and you'll get the answer to why something is the way that it is. But again, people don't show up to these midterm elections. They don't show up to vote for local elections. The city council do whatever they want to do. The county commission, they just do whatever they want to do because people don't show up. They don't let their voices be heard. And if people did, because baby, honey, these people, they're not watching the TikTok. Okay. They're not. So I've always been, first of all, I vote every single election. I always have. And that's why I feel so passionately about this. The thing is, y'all, people care about what's written down because there's a record of it. They don't care nothing about your hashtags. Okay. They don't care about rants on Instagram and rants on TikTok. They don't care about that. They don't get them votes and they don't do nothing. They don't get the money. It does nothing for them. So please, whoever is watching this, y'all, like if you don't hear nothing I say, please get engaged with your government. Show up to the polls. Write tweets, write letters, whatever it is, put it in writing. Call them. I called Elizabeth Warren's office one time about something and I don't even vote for. Like, she don't care about what I think because I can't vote for. But we have to, because if there's going to be a change and there's going to be something forced, you have to realize that you are up against a machine and they don't care about you. Because people still buying these houses at the end of the day. But I appreciate you. Thank you.
Thank you so much. It's been a wealth of information, and I'm going to keep following your channel and listening to you. Thank you.
I appreciate you. All right. Have a good day. Y'all busy in these comments. I got somebody else in the back. I got TJ. TJ, I'm about to bring you up. Let me hit these comments real quick here. Let's see, y'all. What should I say? The flood insurance is the flood insurance is high. I remember when I was in school, they said California's gonna float away. I don't know. I think Florida might float away too, child. Just to work around the increase, make bi-monthly payments. That is very true. You're absolutely right. If you pay one additional payment on your mortgage per year, that will take your mortgage from 30 years. Excuse me. One additional payment per year will take your mortgage from 30 years to like 23 and a half years. Okay. That means that you don't refinance it. You keep that same mortgage. Okay. The whole time. So I feel you. I was a teacher too before exiting the field. Yeah, you ain't want me no teacher in Charlotte. It is a hot mess express. They don't even pay teachers to have master's degrees anymore. Like, imagine being punished for having education when you work in education. It's bad. It's bad. I preach having multiple streams of income. Multiple streams of income are good, but I will also say this: it's better to go deep than go wide too sometimes, because y'all, a lot of people, oh God, it's a realtor in the comments. So please don't like unsubscribe or don't take it personal. But I see so many realtors that be like, oh, I'm a realtor / rapper / actress / ice skater / tax preparer. They want to be realtors. They want to be loan officers. They want to do the insurance. They want to be the notary. It's like, come on now. So multiple streams of income is good, but it's good to master something first and see if you could create multiple streams from that by leveraging whatever the thing is that has been mastered. But baby, people are out here. I have never taken more loan applications in my life that had so many women working 2 full-time jobs. And that's a little scary. They getting it done, but that's not sustainable. Your health is your number one asset. If you ask somebody what the biggest asset is, the most important asset is that they have in their life, they're going to be like, oh, my car, my house. It's your health. Without your health, you can't do nothing. And I had a post where I talked about how much Social Security is. So for all the people that's laughing at people that is buying houses, what you gonna do? If you laughing at people for buying houses now and you in your 30s, that lets me know you probably don't have no 401k. And if you don't have no 401k, that means when you get old, if you paying $2,000 in rent in 2024, baby, in 2054, what you gonna do? What is your plan? I'm just asking for a friend. But yeah, multiple streams. I mean, it's good. It's good. But let's be y'all. Whoo, child. It's been interesting seeing multiple streams. I'll say that. Make more money or partner up is the only options. Come on, somebody, talk to them. Tell them. All the men, the manosphere people, they over there on the manosphere talk about it don't benefit men to get married. Oh, child, I be seeing where y'all live at. It do benefit you to get married. That beanbag chair gonna hurt your back, baby. I'm just saying, it's cute when you 27. Moving on. Also, builders are buying down the interest rates at no cost to the buyer. Yes, they are. So I've talked about it. I'll touch on it very quickly. Just be really careful to make sure that you're reading the fine print about what this discount is and what this deal is. Y'all, I'm telling you, there is no, I don't want to say there's no such thing as a good deal, but what people perceive as a good deal may be the worst thing that has ever happened to you in your life. There's a lot of people right now that got good deals. They hate their life right now. Okay. They do. Them buy downs that people got, like the 2-1, the 3-1 buy downs that people got, that were like, oh, the realtors, they and loan officers that was online, they were like, oh, if you get $10,000 in closing costs from the seller, don't worry about it. You could just, instead of $10,000 to save you $70 a month, but if you take that $10,000 and do a buy down, you'll save $300 a month. Ooh, child. The same people that they came and they got the real numbers from me because I'm not attached to a builder. The same people that got numbers from me, full closing costs, full down payment, real interest rate, not bought down. I said, all right, you can afford a house for $275. And they shopped for the best deal. They found somebody that did 0 down, no mortgage insurance, a lower interest rate on a 5-year ARM. Well, baby, guess what? I don't know if y'all was paying attention to the graphs, but we about 3 years into your 5-year ARM. So what you gonna do, sis? What is your plan? Good deal don't always mean it's good for you, but But yeah, you're right. They bribing the people and they bribing the realtors. The greatest lesson I learned from the pandemic, is that the government will always look out for those with assets first. Absolutely. Because they do not, like I said, it's all connected. Y'all have to make the connection, please. Y'all, it's all connected to the stock market. If people with assets are failing, that means the country is failing. And we can't have that no more. And just so we're very clear, we still haven't had a recession. They're pushing more fees on the consumer. Yeah, they are. I retired from one job. They got a check coming in and got a check for. I retired from one job and got that check coming in for the rest of my life. That's what's up. Now that's the type of multiple streams I'm talking about. Listen, ladies, because we're gonna pretend it's just us right now. Ladies, listen. This is what you do. If you want a man, You get you a veteran. Okay, listen. Again, I'm just talking to the girls. Okay, ladies, you get you a veteran that's, retired, that got some disability. Ooh, child. You in there. That's a smooth $4,000 a month just for waking up in the morning. I'm just telling you, ain't heard that from me. No money down on the VA loan, no mortgage insurance. And if they're 100% disabled and you in a couple of different states, they don't even have property taxes. Hey, look, I'm just trying to put you on game. Just let you know. Look, I'm just telling you, Uncle Sam might want you. All right. Side hustle is a must. If you can start your business, you get a lot of tax write-offs and it works. Yes, that's true. And they can keep you, they can keep some of this money, keep some of the money in your pocket. You're correct. But let me talk, let's real quick. The people that during the good times rolling, these entrepreneurs, baby, they're out of business. Y'all remember all the people that was gonna drive trucks? I'm be a truck dispatcher. I've been seeing them trucks on these credit reports. It didn't go good. Y'all, Sarah ain't wrong, but you best have you some business acumen and you best have you a business plan. I'm gonna tell you what, me, Joy Bailey, the mortgage boss is an LLC, but baby, I'm not a for real business. I got about as much business owning a business as I do doing a brain transplant. Okay. And people need to understand that just because it only costs $200 to go get a LLC or a business license, that don't mean that needs to be for you. That ain't for everybody. Let's be clear about that. Okay? If you have no business acumen, you need to mind your business. Okay? I'm just saying, it ain't no shade. Being a business owner is not for everybody, and it's okay to say that. You say it louder for the people in the back. Oh, come on, right? We are everywhere. You are a vet. Yes. Hospice husband. You're a vet too. Oh Lord. I put all y'all business on blast. Sorry. I'm telling y'all, a veteran is a cheat code in life. I'm not joking. I had a college classmate of mine. She actually stayed across the hall from me. She called me a few days ago. And the guy that she's seeing everybody get engaged, and she was asking me about buying a house. And she told me that she had a vet. I said, girl, tell him go get 100% disability. She came back. She said, he got 100% disability. Oh. Round of applause. It's time to buy a house. I'm just saying. But in all jokes aside, for veterans that are out there, and I'm very serious about this, for the veterans that may be watching, please use every benefit that is available to you. There are far too many conversations that I have with veterans that have not taken advantage of every benefit that they have. I understand that you might feel like it's daunting, but honey, suck it up. Okay. You had bullets that you had to dodge. You deserve it. You earned it. You need to get your 100% if you can. You need to use your VA loans if you can. I've heard a lot of veterans that'll say, well, I'll do a conventional. I don't want to take advantage. Take advantage. Okay. There is a statistic that said, and this is a little while ago, but I'm sure it hasn't shifted very much. Only 30% of veterans that are eligible for a VA loan use the VA loan. What y'all doing? Why you spend all that extra money? I'm just saying, like, you've done your part. Okay. You've contributed what you needed to society. And we appreciate it. Thank you. but you gotta take advantage of it. Like, it's there for a reason. And if you don't know what benefits that are there for you, sweetheart, come on, like let's do a Google search, okay? We gotta find the right resources and people to tell you what you can qualify for, regardless of how long it takes you. You've earned it. Why are you out here spending more money than you have to? You don't need to. So I'm serious about this. So please, like, and if you are a veteran and you have a VA loan, you need to tell your friends. Tell the people what is out here for them, because to not take advantage of every benefit is just it's insane to me. Like, y'all, I know y'all, I'm gonna go off on a tangent, but please find out what you are eligible for and take advantage of it. All right, no divorce after some 21 years. Some of them are crazy. We just gonna take that off. I didn't know that's what it was saying while I was talking. Oh no. Okay. My mom's husband is a retired vet. Yeah, they the cheat code. A hustle businesses. Y'all out here worried about the rappers. Get you a veteran. That's all I'm saying, girl. Hustle businesses is fast money, and fast money does not last. It don't. I mean, they was doing what was trendy and what was cool at the time, and it didn't work out well. When he comes up to speak, could you ask him about encouraging more people to end? TJ, they talking to you. It says, when Real Bravado Network comes up to speak, could you tell him about encouraging more men to enter the healthcare careers, nursing, physical therapy, respiratory therapy, occupational therapy, etc.? I absolutely agree with that. I really enjoy your channel. Very informative. 38,000 annually can't get you a 350,000 home. No, it cannot. It can get you some Cracker Jacks. I'm trying to. I appreciate it. Thank you so much, y'all. Now, without further ado, now that we all caught up, we're gonna bring up the Real Bravado Network, y'all. And again, if you haven't subscribed to his channel, please make sure you do go and subscribe to his channel, because he be. I was like, oh dang! I was gonna say he be spitting that hot fire, but I didn't know you had the flames already going. There you go. Thank you so much. What is going on? Let's check in. You all right? How is your life changed after the pandemic compared to the way the economy was before the pandemic? What are we seeing? What are we feeling?
Before we get there, Joy, can you hear me?
I can hear you.
This is how I know that you are an excellent storyteller, because two things. One, I'm so impatient. I would have been gone a long time ago. I sat back here for an hour. And two,
I was giving a little TLA action.
Right. And then two, a lot of times you got to look at the screen, what you're watching, to be interested in it. I wasn't watching you at all. I'm sitting over here putting tables and stuff together. So that's how I know you're an excellent storyteller. So I don't actually have to, watch you, because some people I can't listen to, but I can watch them. But you, I could watch and listen. So that makes you a good storyteller.
I used to be on the radio, so thank you. I appreciate that.
Look, yes. I really don't know how much. Well, I can tell you this. This year, my income is going to go down probably about 60 grand. I'm going to lose about, yeah.
Are you all right? Or when you want them 800 credit score people, it's like, I don't need that $60,000 because
I am not an 800 credit score. I'm not an 800 credit score person at all. I am comfortably in my mid-7s, so I'm okay. I don't need 800. I'm good. I can get what the 800 get almost.
They get real bougie. So I mean, if you start changing, I'm gonna know your credit score went up. Okay.
Yeah. I'm good. I'm not. I ain't got that kind of time to be working on that. But here's the thing. But I can feel it. Well, I can feel it because there are things that I used to could be able to do or pay and not worry about, that now if I do it, I got to pause. before I do it. You know what I mean? And I mean, earlier I was thinking to myself, you know, I'm in the Midwest, so you know everything about finance and homes and markets, you know, it varies from region to region. So I'm in the Midwest, and so I'm like, man, I gotta get out of this house. You know, I got a big house. It's just me in this big old house. Yeah, it went down by 60K. Yeah, well, that COVID relief fund, you know, drew up last year, so you know, money's got cut. I work in healthcare. They ended the COVID release fund last year for healthcare, so that really impacted what the pay was. Well, it impacted what our premium bonus pickups were. You know, if you pick up, you get so much money. And you know, me, when it was like over $100 an hour, I was in there every day.
I see that with the travel nurses too. That is it, the good times not rolling like how they were back then.
No,
either
back 2 years ago. 2 years ago, it wasn't nothing. I don't know about the nurse, and I got a bone to pick with nurses, so they get more shine than they deserve. I'm just telling you that right now because I work.
Nurse girlies.
Look, they get more shine than they deserve. Let me be specific. The floor nurses get more shine than they deserve.
You don't like the nurse girly scrubs?
Huh? These bougie girls, first of all, they sit and watch Netflix all night.
That's why I said you don't like the nurse girly scrub outfits. Like that's, you know, they be on the TikTok with you like my outfit.
Joy, let me tell you something. I'm a different kind of man. If your person is stank, I don't give a damn how you look. You like it. I'm one of the rare dudes that I actually care about you as a human being. You know what I mean? If you as a human being is terrible, I ain't got nothing for you. So no, I don't. Yeah. So, but it's hitting hard for a lot of people. And like I was gonna go, okay, I don't need this big of a house, so let me here. You know, my house was just a little over 200,000 when I bought it a few years ago. I bought it in 21 or something like that. So it's a little over $200,000. Where I'm from, that's a hell of a house. You know what I mean? Someplace else, you ain't getting in no house in the twos. You know, nowhere near it. Or if you do, it's a dump. And so I'm like, well, I can go. Let me find something that's 130, 140, and then I look at the rates. A 130, 140 house, I'm going to have the same mortgage.
Yes.
I'm going to have the same mortgage with the rates in the 7s and the 8s. I'm going to have the same mortgage. And then I looked at my what I owe on my home. I owe 172. So I'm like, what am I going? I got a 3.2% interest rate.
That's why people are stuck.
So for me, it's not even a payment for me. It's I got too much house for me. That's just it. I mean, too big of a house for me, you know, and I'm lazy. You know what I mean? Like I'm real that Yeah, back to the 60 grand loss. Yeah, I had to get rid of my lawman yesterday. That brother came back with you know, because he showed up for the first time yesterday. Talking about my price went up to $75. I'm like, bro, this your last day. $75.
How big is your grass? How big is your lot?
It ain't that big.
How big? It's like a half an acre.
Yeah.
That is big. See, look at you in the Midwest. That's y'all don't consider that big. That's a lot.
For that's the total property size. It's
in my subdivision. You good if you got 0.2 of an acre.
Oh wow.
Yeah,
I got actually I just got just a tick under an acre of my lot size. Yeah, I got deers and turtles and shit on my property. It's kind of weird, but no,
some deer in the backyard the other day. But no, we 0.2. We winning. But okay, I see you.
Yeah, so it's you know you in Charlotte. You know, I'm in the Midwest, so it's a little different. But it's I can feel it now. Granted, I've never been overly in a debt person. You know, I think that's the case with a lot of guys. You know, I'm not overly a debt person. So the fact that the income is being cut by that much doesn't really impact my day-to-day living. It's just I can't do something like, oh, if my niece needs a car, I can just go buy it and gift it to her. I can't do that no more. You know, I mean, when I say car, because I know some of these people out here are buying their kids like $20,000-$30,000 car. I'm old school. $3,000 is your limit. If you my niece or my $3,000, I'm getting you a fucking.
Where you getting this $3,000 car from? Because Jalen, I was thinking about, okay, so let's unpack this. So when people keep saying reduce your expenses, right? Even a car, even a Honda Accord that's 10 years old is still in the 20,000s. Like, I don't understand.
If you go buy it on a lot,
gouged. Like, where y'all getting these? Where?
If you go buy it on a car lot, they're gonna knife you on a piece of crap car. You know what? You know what I do? I have 3 different mechanic shops, and you know what I do for what they do when they got something like a lot of these mechanics. What they'll do is what sometimes will happen more than you know. Like the mechanic shop, people will come in and get like a motor job or a transmission job, and they can't pay for it. And after 3 months, the shop can take possession of the car, ownership of the car for the debt. And I purchased a Toyota, a Chrysler, and a Dodge, all from the same mechanic.
It was like 1992.
No.
Oh.
The last one I bought was I bought a Dodge Journey for my niece. And I paid $3,500 for it. It had 110,000 miles on it, low miles, and it was a 2015, $3,500. Because the person went to get some work done and couldn't pay for it, sat there for 3 months, and he allowed to recoup his costs. I mean, he got to go through a process. The shop has to go through a process to do it, but they can do it. There are ways to get inexpensive automobiles. Ain't no way in hell. Also, one of my coworkers was talking about he brought his daughter a $25,000 BMW. I said, you bought her a $25,000 paperweight? See, I know about BMWs, and I know they're not that reliable after 50,000 miles. Mm-hmm. But that's just, and I'm like, why would you do that? And it's 16. His daughter's 16. Why does she need a $25,000 car at 16?
Well, I mean, maybe the car is going to last her through college and, into her 20s.
Uh-huh. So with a Toyota Camry. So with a 2005 Toyota Camry.
Well, they say that millionaires drive Toyota Camrys. That's like the car. That's like the number one car of wealthy people.
Yep.
Well, I didn't mean to put wealthy in quotes. They really are wealthy, but real wealthy people.
What I really want to get to you about, which is one of the reasons why I'm going to rebranding, because I've gotten burnt out on the relationship conversation. I think me and you were, last time we talked, we was alluding to that. So one of the things I'm glad you brought up was the fact that people are not involved with their local governments, their governments, period. And there's a mall, or was a mall, right behind where I live, about a mile behind where I live at. And this developer bought the mall to develop the land. You know what I mean? It's going to be a business and condos and stuff like that over there. The county government gave the development, not only did this developer get all kind of, tax incentives and rebates and stuff like that, the damn county gave this developer $10 million to knock the damn mall down. Me and my buddies could have did it for $100,000 in a case of beer.
So you feeling like they mismanaging the funds?
I was livid. Like, and the money was for. Now, here's what I can't understand, because it was COVID relief funds that was earmarked for the small businesses in the area who never got the money. And I'm thinking to myself, why weren't the small businesses raising holy hell? All of these mom and pop shops that we got here in St. Louis, why weren't they raising holy hell about this large developer getting $10 million to basically tear down his own property? So I went to the next county board meeting and I requested $1.5 million to knock down my house so I could build me a new one on it. First of all, the board The county board, they of course not one of them cracked a smile, but people that was there with me, they were laughing. I was like, no. I said, this man bought property, he bought land, he's gonna build on it. I got property, I got land. If I want to build on it, all of that has to come out of my pocket. So if you can give this developer $10 million of my tax money, I want 1.5 million so I can knock mine down and build what I want on my land. Can you please do that for me, please?
But they're looking at the long game, right? In the long game, what they're thinking is, okay, well, whatever they build is going to generate revenue for the area, that's how eminent domain works.
That's why we gave them tax credits. We gave them almost $30 million in tax credits.
Well, what kind of business was going to be there?
There's going to be apartment complex, a business district, and something else that's going to be over there. And
you in St. Louis, right?
Right.
Mm.
They're trying to revitalize and it's in my backyard. And let me tell you something. So my mortgage, when I first got the house, my mortgage was $1,410 and some change. This shit. So 3 years later, it's $1,600. That's because my new tax assessment that came out this year, it went up. My taxes went up $1,300.
Did you appeal?
Of course I did, and I got a nice little Dear John letter.
Well, so here's the thing. Okay, let's reset the room. That's okay. Like I don't really understand. People get very excited because you said, oh yeah, I got my property for this and it's worth that. Well, why would your taxes not go up? Like if you were to purchase that home today for that same amount, that's just what the taxes would be. And you'll be okay. It goes together. So if your equity position has increased, you just got to pay a little bit more into the community. Now, in my opinion, a little bit more into the community because now I feel like I got a little bit more leverage to say what I want to say to the people.
Joy, I don't mind my taxes. First of all, I don't mind if the taxes go up, but $1,300 in 1 year, that's insane.
It's $100 a month.
That's insane.
Is it?
It's insane. Joy, here's the other piece of the pie. So it's going up that much, but you ran the grocery stores and the pharmacies out of our area.
Oh, that's unfortunate.
There you go. So I bought into now my subdivision is great, but you walk outside of my subdivision, you can tell that the area is not necessarily going in the direction that it needs to go, especially when you got $3 stores within about 6 blocks of each other that are all brand new, that are popping up. When Bank of America closed up its building and moved out of the neighborhood. Come on now.
Wait, hold on. What kind of neighborhood you live in that y'all don't got no banks in the grocery stores? Because it doesn't
I'm telling you what's happened in the last 3 years. Bank of America, and let me tell you something. All of these people,
it don't sound like a very prosperous neighborhood.
And here's the thing: it used to be a very thriving area, and as soon as I go out of my subdivision, there's Bank of America. Well, what was, there was the VA. Or the administration building was right here. You know what I mean? We had a phenomenal grocery store that was right there. It's gone. You know what I mean?
And all of this happened since the pandemic. Is that what you're saying?
In the last 3 years.
So this is how your neighborhood has changed.
It's
before
changed
pandemic to now.
Yep.
Okay.
This drastically. CVS is gone. Walgreens is gone. We got $2 Generals and the Family Dollar that popped up in the last 6 months. We got them.
Your neighborhood is a changing. Okay, that
so $1,300.
So I ain't really throwing no shade. I mean, I am a little bit, but I mean, y'all listen. If y'all listen. People want to know when they look at neighborhoods, they're like, "Is this?" He trying to tell y'all. So I hope y'all listening. Listen to what he's saying to you. Signs are all around you to know what kind of neighborhood you move into, okay? The Family Dollar sells the most milk of any business, any grocery store, any Walmart, okay? Shout out to Family Dollar. But it's for a reason. Y'all got to pay attention to these things, right? You got to pay attention to mud. I saw a realtor in here. Mud. Pay attention to how much mud is in proximity to where you're wanting to live. That doesn't mean there's something wrong with an established neighborhood, but you want to pay attention to what type of stores and businesses are in that area, because these businesses have done millions of dollars of research to make sure that their target customer is going to be able to patronize them so that they are profitable, right? So that's why I was like, ooh, this sounds like it's a change going on around the neighborhood.
Yep.
So
The biggest change, I should have known what happened. I should have known this was coming. About 2 miles away was this large luxury apartment complex, and then that this corporation owned, and it was sold. And when it got sold, the new owners opened up 50% of their occupancy for housing in Section 8. So we got flooded with Day and Boomquisha now.
Now, see, now, see.
If inside of my subdivision, it looks like nothing's changed until you get out of it, until you get out onto the main road. You know,
and location is very important. They said location. It is very, very, very.
I mean, the community is like shell shocked right now. Like neighborhood association meetings, county board meetings have never been as packed as it is now, because first of all, the majority of people in my area is still homeowners, but people are leaving, and then we having developers coming into my subdivision and trying to buy out our homes to rent those out to the Section 8. So there's a little bit of a silent war happening right now within my area of town, because it's just like it's happening so swiftly. You know, a lot of times it's a slow progression of like this, but this is happening fast in my area, and we don't understand why it's happening at the rate that it's happening or what the purpose of this is. This is crazy. They're killing a somewhat upper middle class community, and we don't understand why.
Yeah, so he's saying sounds like gentrification in the making, but that's the opposite.
It's the opposite. It's the opposite.
Because, like I said, honestly, there are national indicators in terms of types of store. Whole Foods, baby, you done made it. Okay, you got you a Whole Foods. Settle in. You good for the next 30 years. Walmart, Target,
Joy,
Starbucks. You know, I'm just saying, you gotta pay attention to these things. And I mean, Dollar Tree. I'm just saying, all people shop at Dollar Tree. I think that's okay, maybe like a middle ground. But I ain't never seen a Dollar Tree near the Whole Foods, though. I will say that. So take away whatever you want from that, but yeah, that's unfortunate. I don't know. What have you looked up what the plans are? Because a lot of people don't know. This is public information. So going back to when I was saying that people need to be more civically engaged with their local government, nothing that happens is a secret. And I've said this about like the build to rent communities. People get all up in arms after they build it. Well, shit, years ago when they purchased the damn land.
Here's what I think is happening here.
It happened right in front of your face the entire time, but you chose not to pay attention.
Here's what I think is happening here to a degree. Downtown St. Louis has been a ghost town and waste dump for 30 plus years. Now, I wasn't here that long because I'm a transplant, but in the last 10 years, they've gotten a new ballpark stadium downtown, a new soccer stadium because we have a new MLL team. We have a new XFL team that's here, and they've created all of these high-rise luxury, condos and apartments. And I think what they're trying to do is they're trying to force the people who live out in my area used to live in the city until the city got run down. You know what I mean? I think they're making those homes down there more affordable. So I think they're trying to repopulate, you know, the city by squeezing out where we are now out in the country. I think that's a plan, because they got all of this stuff down there, but there's no real tax revenue right now to support it. And so, because everybody fled the last 30 years, they fled the city and are out what we call the county, St. Louis County area. So that's where the populace is. St. Louis City, it has a population of just under 500,000. Where I am, we're almost at 3 million. So, okay. Yeah. So St. Louis City itself, or St. Louis proper, their actual population is lower. But if you look at the St. Louis metro area, with 3 million people. So, I mean, and there's two different governments. There's a different government for St. Louis City than there is for St. Louis County. They're separate entities. So they have two different. So we're governed out here by a county executive, while the city is run by a mayor. So there's two different governmental systems in place. There was some talk at one point of trying to merge the two, but the county was like, "Screw you," because the county had all the money. You know, this is where all the middle, upper, and rich folk live at, is out in the county, and the county is broken up into different sections too. But I think they're trying to take they tend to do this to the because here in St. Louis, you actually have poor, middle, and upper middle class Black neighborhoods. Like, I've never seen that anyplace else, where you got like Black folk. They got the poor Black neighborhood, the middle class Black neighborhood, and then the upper middle class Black neighborhood. They have
Atlanta.
Just see it. Yeah. I would know.
Atlanta, Charlotte doesn't. I mean, we have one affluent Black neighborhood. It's called Hyde Park, and that's it. We one and done. And it's been around since before I was born. So
yep, the poor to middle class Black neighborhood here, the big one everybody knows about, which is Ferguson. But it's got a 60% baby mama rate over there. Single baby mama rate over there. But to your point about this money, somebody said it in the chat, Joy. Yes, you got to do one or two things. I'm going to amend your statement. You got to do one or two things. Yes, earn more money, or find a way to get along with somebody, get up under the same roof with them. Yeah. Those are the options right now. And I think, because it's the cost of everything is ridiculous. Mm-hmm. I'm willing to take a deal. My house is big enough where I ain't got to sit up under you all the time, because this. I'm gonna take a deal. What? I'm gonna take a deal. Look, I didn't got. It's time for a deal. It's time to make a deal.
Well, get you a veteran, okay?
I don't want no veteran.
What?
How many female veterans are out there?
Well, it was 2 or 3 of them that was in the chat.
And they want them female veterans want another male veteran. Like my sister, she was in the military, the Marines, and she just married a disabled vet. A little older than her. They over there killing the game. They got their housing voucher. They both got access to the dog. Yeah. little young ass one out here got her a $500,000 house out there with the white folk. She sure did, her and her white husband. And then she just gave him a half white baby. Congratulations. Shout out to
disabled veterans again. Thank you for all that you do.
My dad's like, I don't know what they doing. I said, your daughter is over there hustling that white boy, so don't worry about it. Just be grateful she's being taken care of.
Man, well,
I'm willing to make a deal. I make good money. I'm willing to make a deal. You don't make good money. This shit for the birds. I had to cut my lawn man. Look, I'm willing to make a deal with somebody so I can get my lawn man back.
I was talking to my homeboy. He was like, Joy, you got a 15-year-old son. Why don't you have him cut the grass? First of all, let me tell you something. I didn't know how much lawnmowers cost. I thought they cost thousands of dollars. I was like, well, why would I? I just found out they cost like $200. So I think I might actually have him start cutting the grass. But it is like those little things here and there that you can kind of pinch a little bit. But again, as I showed on that consumer price index graph, the real stuff that people are paying for isn't being counted. So I'm disenchanted as an American. I'm going to be honest, as someone that has consistently had an above average salary, I feel a little disenchanted. I don't know. Like, what y'all want from me? What do you want me to do? Now, and for those of you that do not own homes, I will say this. Another thing that I'm extremely grateful for, while I'm complaining a little bit, and I do complain, the one area that I can't complain is that my housing really hasn't gone up. To God be the glory. I will say that is the biggest hedge against inflation, your housing. When I graduated from the North Carolina Agriculture and Technical State University over there on Market Street in Greensboro, North Carolina, with my Bachelor of Science degree in Journalism and Mass Communications, my first apartment by myself, one bed, one bath, was $650 a month.
Mm.
Now, granted, that was 20 years ago. But again, if I would have bought me a little portfolio, what is it called? Portrait home, 2-bed, 2-bath, townhouse 20 years ago, my mortgage would be $700 a month, maybe $800 a month, even now. So it is absolutely a hedge against inflation. So again, to the people that think it's cute to get on the internet and laugh and make fun of people that are purchasing homes, circle back in 10, 15 years and let me know what's going on and how you're doing and how you're feeling. So like I said, if I'm feeling disenchanted, baby, honey, we're gonna watch your wrist. If you feel me? Because I don't know if you're going to be very pleased with life.
It's no longer financially smart to rent because your rent and mortgages are the same.
So
in my area,
nationally, rent is cheaper currently than a mortgage payment is. But it's going to shift. But them rents ain't going to shift. Them rents going to be the rents. I've never in my life seen anything that had a substantial reduction. So if people don't know this, I'll tell you. The reason why 20% equity is like the magic number to not have mortgage insurance, whether you acquire it through equity over time or whether you just put it as a down payment, is because if there is a market correction, a market shift, 20% is about where it's going to be. Okay. Baby, these houses ain't going back to 200 and 250. They're not.
Unless you live in St. Louis.
They're not. So that's what I'm saying. So nationally, they're not. It's just, it is not going to happen. And so we have to focus on the now, not the what it used to be. And like I said, I had that day when I had to sit with myself and I was like, this is it. And so in order to move forward, we have to figure out what is the best pivot that we can take. What can we do? Because swiping them credit cards ain't it. What was the number? We 20% a month interest rates, and the credit card debt is 1.12 trillion, and that was in the first quarter. We about to head into the third quarter. Yeah, we about to head into the third quarter. What we doing, y'all? Y'all ain't never paying them credit cards off. Child, they're gonna be charged off. Don't worry about it. Like I said, on Tuesday, we're gonna talk about what to do about these credit cards. I'm gonna let
next year
I'm gonna let my sis, from the Rosea Jamise firm. Her name is Tiana. Tiana from the Rosea Jamise firm. She gonna come through and she gonna talk to y'all all about how to get these credit cards down, how to budget your life, how to restructure, whatever you need to do to get to a more comfortable place. But this ain't it. Y'all gotta make more money. That's a cold hard fact. I don't know what else to say. Anybody that is running from that as a fact, I mean, that's okay. It's 5 stages of death. Okay. You're going to get to where you need to be eventually. It might take you a little longer than the rest of us, but baby, the 5 stages of death. If you don't know, go Google it. But you will one day get to acceptance. I assure you. Okay. It's a part of the circle of life. So let's see what else we got going here. Who Dark and Lovely, what y'all talking about? A $200,000 home does not exist in New York, but that does not mean that you have to move. Okay, let's get. Hold on, wait. Let's get.
Joy, I'm gonna take off. I'm gonna finish putting this stuff together. I appreciate you. I'm gonna keep watching.
I appreciate it. Thank you so much.
Yes, ma'am.
But let's be real clear. Just because y'all don't have $200,000 homes, don't mean that you need to move. It's okay. You can make something shake. Okay. You can make something shake. You can figure it out. And if you do choose to live Charlotte, we ain't got it either. Okay. Iowa, Wyoming, Nebraska. It's lots of states that's not Charlotte. Okay. I'm just trying to offer some choices to the people. That's all I'm trying to do. Okay. That's it. My one job, trying to offer something to the community. All right. But y'all, hold up. I gotta acknowledge. We had Pocket Watcher with JT in the building. I do appreciate him for stopping by. I kind of fanned out a little bit. I ain't gonna hold y'all. Pocket Watching with JT is absolutely amazing. If you don't know who he is, you best get to know who he is. He has a YouTube channel. It's getting a little spicy over there. Now, if you want to see somebody read somebody down to the ground, JT don't play. He comes for next. And when he get on your head, he don't get off until you stop moving. And I'm not talking about temporarily stop moving. You're done. Okay. Down for the count. You out of there. He is a certified financial planner that, by his own words, is petty. And what he does is he tries to combat misinformation from so-called gurus that are online. Now, me, I get a little gossipy or whatever, but I have multiple degrees, and I also have experience in the job that I have. I'm also coming to you with information that you can fact check. He fact checks people that come to you all on the internet and tries to emotionally expose or abuse you by offering these elusive opportunities that really don't actually exist. They make these promises, these pie in the sky promises, these dreams like, oh, all you got to do is, and you're thinking, well, Joy is full of shit. She told me that I needed to make more money to buy a house. She told me I needed to have 5% so I could pay for my closing costs and my down payment. You know how I say people like to be lied to. So what JT tries to do is expose the people that's lying to people, that's taking advantage and ultimately costing them a lot of money. So y'all might need to go check him out. Because he's, like I said, he's really smart, and I like really, really smart people. But JT gathers people, okay? He over there snatching edges, and I live for it. So please make sure y'all go and y'all check him out. But as we wind down, because we like 3 hours and changing, I can't believe y'all been hanging out with me talking about mortgages and finance and the economy for 3 hours. Y'all nerds? What's wrong with y'all? Y'all supposed to be out taking shots and stuff. What y'all over here with me? I appreciate it. I love it. I really do. Thank y'all. Just Talk TV. You said that's why I live in the city. Big cities never have these problems. No, they don't. You're right. In 2008, I was a 2008 homeowner, lost it all. I'm in Illinois. You're back debt free, buying new DR Horton for 400,000. Congratulations. That is a wonderful, wonderful, wonderful story. And it mirrors my story as well, which is why I say I tell my business, because I don't be want people to think that I'm just over here just talking shit and talking down on people and talking bad about people. I'm a real life person. I had a foreclosure in 2011. When I was in was that the year when did I graduate? I graduated college in 2005. I bought a townhome in 2006 while I was in between jobs. I had a job. They said that they was going to hire me. I had an offer letter, but they kept pushing the date back of when I was going to start. That really should have been my sign to like abort mission, but whatever. So I ended up getting a house. I got an 80-20 loan because they were able to take me from just a regular FHA loan into the 80-20 loan. And when they did that, I think that was probably the beginning of the end, to be honest with you. But, 4.5, 5 years later, the bank was like, all right, girl, you was there for a good time, not a long time. Move along. And I bought my townhome for $127,000, and the person that bought it behind me got it for $44,000. So there's that. So when I give advice, I speak from a person. I done sat in the hot seat. It ain't fun. It is not fun for your chest to hurt in the middle of the night because you wake up all of a sudden, you like, and if you know the feeling. I ain't talking to these 800 credit score people that got it all together. Okay. I'm not talking to the financially, fiscally responsible people that life will never, ever happen to. I'm not talking to them. Okay. I'm talking to everybody else. I'm talking to the people that they was good before the pandemic and now they like, I did all the right things. I checked all the boxes. I went to college. I got a good job. They said it was a good job. What happened to my life? How did I get here? Them people I'm talking to. I ain't talking to them other people. Okay. So congratulations, because it does take time. And I think that the best teacher in life is time. And when you have experienced something like that, it sticks with you. You never get over it. When you have had your home taken away from you, regardless of the circumstance, it sticks with you. You never forget it. And when I talk to people, I always say that I try to rip the Band-Aid off fast as possible, because for me to drag somebody to the start line, I'm dragging them, and all along the way they're getting cuts and scrapes and bruises, because like I said, I'm dragging. We at the start line, and now they got all these little tiny cuts and scrapes and bruises because I'm dragging them. Oh my God, okay. Woo, child, we got you to that 581 credit score. Oh, you ain't got no money? Oh my God. Okay, let's see if we can get you a gift. Oh, I'm exhausted. So I know y'all exhausted. And when it don't work out and they done been battered, bruised, cut, scraped all up, and now I dump them in some alcohol, when I tell them, hey, I know we did all of this. Sorry, it's not going to work out. I'm going to give the person PTSD. I would rather tell you no up front than give you a whole lot of maybe, possibly, hopefully, doubt, and you traumatized. No, it is a less than 1% chance, according to the data, for somebody with a 580 credit score to actually get approved. And the goal is to get approved, not to apply. Okay, so I talk about these things. You have to have money to buy a house. I don't give a flying flip what these realtors tell you. Baby, they need commissions. Okay, let's call a thing a thing. We salespeople. And when I say we, I mean me too. But I have had this type of experience, and I came out on the other side and I purchased a home. I bought my home in 2017. There is life after it. It might take you longer than somebody else to get to the promised land, but you'll get there if you diligent and you listen and you follow direction and you stop trying to take the shortcut. Because baby, sometimes, all the time, The long way is the short way. And that's that on that. Congratulations. Oh, the powers that be wanted to cash in on his neighbor. We gonna have to stay tuned to that story. I don't know what that's about. I don't know about like a reverse gentrification. Well, I mean, I've seen it happen to schools. They did it to my high school. My high school was one of the top high schools in the nation, and they practically lit a match to it. They turned that school inside out with just a raise of their hand on the school board. It was a terrible, terrible time. So, I mean, maybe we never know. Good talk. I love talking about economics and real estate. I love that. Well, you're a realtor. That's why. Why? Let's see. Yep, the property values definitely would you say that the property values will sure, yeah, they'll drop depending on the type of business coming in the neighborhood. When the developer is finished, they're gonna take out the trash. They need property prices to remain low for the moment. You're probably right. There's certainly long-term plan. Companies like CVS, Walgreens, Starbucks, they'll leave because of the crime. Yes, that is true. When you start seeing these major companies, like even with the malls, there's been somebody asked about commercial properties earlier, commercial developments. Like the writing is on the wall. When these major corporations pull out, it's because they like, ooh, I'm not renewing a lease on this. So yeah, you got to pay attention. And then when they come into the neighborhood, you have to pay attention because it's a sign that they feel like it's going to be a prosperous area. They're not coming in there to lose money. Also pay attention to when they like you go into the Walgreens and stuff and they lock up the baby formula. I mean, you don't need to ask your realtor if it's a bad neighborhood. You know. I'm just saying. And realtors cannot volunteer that type of information. They can't tell you what the crime is like. They can't tell you what the schools are like. You got eyeballs. If you know what to look for, then you know. But you can also check with your county. This, again, plans and permits is public information. If you want to know what's happening in your area, look at the different zoning permits. They may be turning a commercial area now into a residential area. Figure out, well, who wanted this to become residential? Is it a major builder? Oh my God. Let me Google them right quick. Oh my God. Every house they got is 500,000. What's about to happen to my neighborhood? You might get excited. You have to pay attention to those type of things. You got to do your research. Nothing happens by mistake. Nothing happens by surprise. And if you know what to look for and you know where to look, you'll always be ahead of the curve. They have the haves and have not really with gentrification. The haves pushed out the have-nots, and you're right. Yeah, so I don't know what that was. That's a different type of situation. You say you knew he was close to downtown. Rent your house at Section 8. Oh yeah, that sounds like it might be that type of situation. Publix, Winn-Dixie, baby, we used to have a Winn-Dixie. Let me tell y'all, when I was in college, we would go to Winn-Dixie and get $2.99 crab legs. My friend Patrice put me onto that because I was like, what? Mm-hmm. Yes. You got to pay attention. Just because you have a grocery store, pay attention to the types of grocery stores because it's levels to grocery stores. It's levels to gas stations. It's levels to everything. And if you know what to look for, like I said, like I think Walgreens, CVS, just based on like where I see things. And also you have to pay attention that usually when these developers develop things, they develop them like in pods almost. So we have an outlet like we have two outlet malls. So I paid attention to what's at the outlet mall in the north. The outlet mall in the north, they have certain restaurants, so when I was like, oh, well, they're probably going to mimic that same thing down here. If you see an Outback coming, it's getting ready to be an Olive Garden. Like there are certain competitors, and you got to pay attention because the answer is right in front of your face. You have to pay attention to know what's going on. But yeah, you said Dollar General near both of them grocery stores. That is hilarious. They're manufacturing the profits to buy low and sell high. Even big cities can suffer from such change. They undergo they're under poor management. Yes, that is very true. That is true. Come to Atlanta. Yeah, y'all definitely got the low, medium, and high Black neighborhoods. Yes, the county government versus the city. Yeah, they definitely trump it for sure. Now, I don't know if y'all, like in my city, the mayor's not a full-time job. Y'all have to understand the way that your local governments work. And a lot of people, they don't know. But again, like I said a lot earlier, a couple hours ago, I believe that some of the things that are happening right now is directly tied to low literacy. And we got a bunch of grown people that are not fully literate. You do enough to get by, but a lot of the basic things that I taught 7th and 8th graders on how to research and differentiate, determine if a source was credible, grown people don't know how to do it. They do not know how to do it. And now we like all going hell in handbasket. Ain't no shade about it. It's the truth. Atlanta neighborhoods, 600 and up. Really? They do. I see it on Instagram. So yeah, you're right. Yeah. Energy costs will be going up soon. Also, it is up. I'm looking for a second husband. I hear y'all. Y'all are so funny to me. Yeah, a second. No, like I said, let me give me a disabled veteran, please, somebody. Y'all know I'm not being disrespectful. It's a joke. Laugh. I don't have that much grass for a riding lawnmower. My son is tripping. He get ready to. If I buy one, it's gonna be a push lawnmower for sure. Okay. The Hollywood of the South. Y'all enjoy yourselves. Please don't think that that's gonna be Charlotte. Charlotte is boring. Charlotte is so boring. Oh, yeah. I'm going to sleep after I end this live. It's so whack. Terrible. Are you saying, oh, yeah. Ray, are you over there volunteering to be the second? Like, what is happening in these comments right now? What y'all talking about? What are y'all over there talking about? Just Me. Thank you so much. We appreciate your service, y'all. Shout out to Just Me for being a female veteran. I thought once upon a time I was gonna be in the National Guard, and then 9/11 came. So I said, "Oh, I think civilian life is for me." But thank you so much. We appreciate your service a lot. Wait, hold on. What'd you say? They'll be saying that no one told them to buy. Y'all just need a roster. What are y'all talking about? Okay, y'all talking to each other. Okay, so everybody talking to each other. Is anybody? Y'all are so funny. All right, y'all. I'm gonna wrap this up. This been real. I appreciate y'all for coming to hang out with me. Like I said, I just did this kind of like, let me see how Sundays go. I've never done a Sunday before. This was interesting. I will be back on Tuesday with someone that is extremely savvy with finances. I think she in the 800 club. So if y'all are in the 800 club, y'all can, talk your shit together about the rest of us. I think that it's going to be very beneficial. Like I said, we have very similar personalities, and it'll be a great opportunity for you all to ask questions about what you feel like might be a good way for you to pay down some debt, pay off your credit cards, or anything like that. It looks like I have a question here. At closing, do you have to pay for the down payment and closing costs by one bank account? You can split it up if you need to. Yeah, we're just going to source whatever the monies are. So just be prepared to make sure that those monies are seasoned, meaning that that money has been in those accounts for 2 months. If I have a checking account with Wells Fargo and I take my money from Bank of America and I put it in Wells Fargo 1 month and we see it's only been there for 1 month, we're going to be like, hey, where does money come from? If your answer is, oh, I got it from Bank of America, that's fine. Go give me the Bank of America statements for 60 days so I can see that that money had been there. So that's what we're looking for. We just want to make sure that the monies that's used didn't just like fall out the sky on your head. Now, if the money did fall out of the sky on your head, let's pretend you sold a vehicle. We're going to ask for documentation to support whatever the story is that you told us. Everything isn't black and white. It's a lot of gray. Yes, it's a lot of X's and O's, but just understand that the meat and potatoes of your loan application is your narrative. So if what you're doing sounds right and it makes sense, you won't have any problems at all. Getting prepared to buy a house is the hard part. The buying the house is not hard. The people that y'all see on the internet crying and complaining and upset with the process, they didn't listen and they tried to fix their problems while they was in the process. Alabama? What? Alabama? Y'all say Alabama got space? Okay. Send them on to the Alabama. I love it. Come on with the recommendations. Wait, hold on. Somebody says about Utah. What'd you say? Oh, all right, y'all. Well, I appreciate it again. Thank y'all so much for spinning. Oh God, I got a lot of comments. Oh my God. Wait. Okay, I thought I didn't have a lot of comments. Are y'all talking to each other? Okay, you talking to me. Do you believe that unmarried people should consider connecting with someone in a practical marriage in order to provide greater financial security for homeownership? I think that if you and another person that are unmarried get together and you want to purchase a home, it's usually going to be a horrible idea. I recommend people get papers on somebody. Now, I can't tell grown people what to do. My opinion really doesn't matter. But what I can tell you is that universally in the industry, both realtors and loan officers tend to kind of chuckle a little bit. Because we can see when it ain't gonna work out before y'all can see it ain't gonna work out. If you've ever done real estate, you know what I'm talking about. They literally, we like, they don't agree on nothing. This ain't gonna work out. This ain't going far at all. You want to buy a $600,000 house. You want to buy a $300,000. Ooh, this ain't gonna. It won't end well. And you got to keep in mind, y'all, when you are married to someone. Now, I did do a video where I had an attorney, a family law attorney, come on, and we talked about this. And her recommendation is if it is two unmarried people, regardless of familial status, mom, son, sister, whatever, boyfriend, girlfriend, boyfriend, whatever the scenario is, her recommendation was to get legal counsel and get some stuff in writing. Determine who's doing the down payment, how much of the down payment, document all of those things, and have an exit strategy. Who paid the mortgage? Did y'all split it 50-50? All of that stuff be spelled out in advance so it don't get sloppy and messy. Because when you are married to somebody and you got papers on them, when it comes time for the divorce, they have an attorney to litigate that. They have a judge to determine who pays what, whose responsibilities are what. When you're not married and somebody we broke up and y'all think you could call round to the bank to say, hey, bank, Henry isn't here anymore. So can you just make sure put everything in my name? Absolutely not. Absolutely not. We cannot do that. Henry is attached to that house. He gonna be attached to that foreclosure. He gonna be attached to them payments until somebody somewhere is able to refinance that property into their name. Okay, so work it out. However you do, I just recommend you get some papers, some kind of way, so that you don't end up in a sloppy situation. Thank you, Sherry. I really appreciate that. Ooh, too much sprinkle, drizzle. Y'all are funny. Oh man. Okay. You say you blessed to buy your house right before the pandemic. Glory be to God. Yeah, it really is luck. And the people that's like, I know this was good. Child, relax, sit down some dang on where you ain't no. It was luck. It honestly and truthfully, it was luck. A lot of people got very lucky, and you should in fact be very grateful to God as we sit here on this good Sunday before Memorial Day. People are looking to be taken care of, but a 2-person household is not enough more either. Yeah, I know it's not. 2 people with 2 jobs might be enough. But again, it depends on who you marry. Y'all got to pay attention to these things. People be trying to downplay money and be like, oh, okay, we'll be happy and be broke. I mean, I like to eat. I like crab legs. I mean, I'm about to figure it out. I don't know. I went to CVS and the nail clippers was like, that ain't my type of neighborhood. I can't go over there. Please don't invite me to the cookout where your CVS got nail clippers locked up. Oh, Lord. Oh, my God. Y'all. They don't be locking them up in no, they do not. Nope. Nope. I done been over to the rich neighborhoods. They don't have them type of problems. Man. Yes, I think we all kind of agree. It's just you have to, again, I said it over a year ago, and people were very offended by it. Y'all, $100,000 is the starting point. There is no way around it. I don't care how you budget. I saw some lady lying on Facebook talking about, I think she lived in Alabama. I ain't nowhere in Alabama where this statement is going to be true. She said that she was living very comfortably with her 3 kids on $40,000 a year. Liar, liar, pants on fire. 100,000 is the new starting point. And if you don't like it, I don't know what to tell you. You need to go to a different country or something. That is just the economics of where we live right now. I don't know what to say. I don't know what to say. Now, some sort of like financial planner might call me a liar, and that's okay. You could call me a liar, and I'm still gonna stand on what I said. It's the truth. But what are y'all talking about? Okay, y'all killing me. Why everybody trying to go to just about to get her a second husband and gonna have a staff by the time I get to the bottom of these comments? Oh, hold on. Somebody said something. Wait, where I see Harris Teeter. Hold on. Wait. Publix, Harris Teeter, and Lowe's. They low-key quiet wealth area. I got a Harris Teeter. I told y'all. I'm just saying, pay attention. I would say places like in Augusta, smaller towns for the win. Boring is good. No, it's not. Boring is terrible. No. Boring is bad. Boring is bad. You don't want this. Y'all are so. When I went to Charlotte, it was a bunch of manufactured trees, homes and trees. I hope they've changed this time. Okay, yeah, that's yes. We can have whatever it is that makes people be like, oh, I don't think that's a good idea. But seriously, all jokes aside, Charlotte has grown. Charlotte is popping. But we don't want to be popping with crime, and the crime rate has increased. And I got a video talking about it. I'm just saying. Y'all are in the comment section acting crazy. Y'all make sure y'all come on Tuesday and act wild then too. Y'all talk to old girl like that, because she gonna get with you. Okay, she younger than me. Thank you so much. I appreciate it. Oh, you're so kind. Thank you so much for the super chat. Thanks for the info, fellow Charlottesville. 704, not 980, y'all. It's a difference. Okay, we have multiple area codes now. 704 was the original area code, and I'm gonna have that phone number till I die. Okay, so 704, not 980. Thank y'all so much. Y'all are so funny to me. I appreciate y'all. Y'all have really made this a very enjoyable experience, and I have never had this many people on my in my chat. This is crazy to me. I know what's going on in Huntsville. I don't be watching that show, but it sounds like y'all got some sloppiness going on around Huntsville. But whatever. But yeah, New York people, please stay in New York. You say you love crab legs too. Listen, I need them on sale. I can't do it. Them crab legs, like that's the whole budget for the week. Trying to eat some crab legs. But anyway, y'all, thank y'all so much. You said I can't. By the way, I can't find any of you to follow here on YouTube. What you mean? Oh, well, come back on Tuesday. We'll make sure that you get right. Real Bravado Network is on there. Like I said, I think what's her name? What is it? The RJ firm. I think that is her YouTube, and she'll be here on Tuesday, y'all. And I promise y'all, like I said, she got 100,000 TikTok followers, and it is a little easy to get followers over there, but she's a good time. So I hope y'all come and kick it with me on Tuesday. But again, thank y'all so much. Shout out to all of the fallen heroes from our armed forces, family members of the fallen heroes from all of the branches of armed forces. I thank you for your family members' service to this country. They have allowed me to get over here to the internet, talk my shit about the government, whatever, say what I gotta say, get it off my chest, and not feel like I am going to be threatened or harmed in any way outside of the algorithm, maybe suppressing my views if it doesn't agree. But again, sincerely, thank you. I hope you guys enjoy your Memorial Day. Go have y'all a drink or something tonight. And I will see y'all on Tuesday. Y'all, please remember, do justice, love kindness, and walk humbly with God. Y'all have a good evening. Bye. Oh, what time on Tuesday? 7:30-ish.